We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right, welcome back, everyone. Hope you guys are having a great day as always. I know we're doing a pretty late night stream here tonight, and yeah, I'm sorry about that, but we got busy. So the first thing we're going to be talking about, the topics are listed in the title, and we're going to be talking about Robinhood stocks. So there's actually quite a bit to get through here. The major changes on the recent announcement from the new product offering, I think, are quite intriguing, especially when we kind of overlay it with other products out there in the fintech space. We're going to first discuss Robinhood specifically, and then we'll kind of address how it affects other businesses adjacent to Robinhood. So if you guys need an introduction, just in case, Robinhood is one of the brokers that first pioneered the no commission trading. And for better or for worse, a lot of people have mixed opinions on Robinhood. But for the most part, you can't really deny that they've really shaken up the industry. And now most of the industry has actually moved towards this commission-free trading style. I personally do not use Robinhood, although I don't think that there's something inherently wrong with Robinhood as long as you use any brokerage responsibly. I do think that some of Robinhood's tools are a little bit lacking, especially for those of you who want a little bit more oomph in your investing. But for the most part, as far as the basics go, Robinhood has you covered. If you're, for example, looking to dollar cost average into index funds, I think Robinhood's perfect. The UI, I don't know if anyone tells you that the UI is not that good, they're lying to you. The UI is amazing at Robinhood. I think that it beats everyone else's app-based UI. Although everyone else's is pretty usable. And I'm thinking of the Schwab's, the Merrills. I don't know about TD's. I don't know about Fidelity's app, but I imagine Fidelity's is also decent. But the worst one that I know of in terms of UI is Interactive Brokers. And if you guys have an Interactive Brokers account, you know exactly what I'm talking about. But you get used to it, and so it ends up being fine nonetheless. But Interactive Brokers, there's a lot of things you can do. So actually, that for me is a more of a plus. But if you're talking about simplicity, Robinhood really has you covered. And so they had the announcement long time ago. Many of you probably weren't investing back then, but Robinhood Gold came out, and when they started margin, etc. So Robinhood Gold was this new product in which you could access this margin for $5 a month, and so $60 a year. Now, fast forward to today, they've actually made a lot of adjustments to that. So now we already have the high interest savings account that I think it's at 5% right now. Then they had the retirement account match, which this promotion was to, of course, grab a lot of capital, get you in there. And the idea is, well, we have this acquisition cost up front, and then we'll keep you for a much longer time. So if you read the fine print, by the way, on that retirement account, it's about 5 years that you have to keep the capital in there in order to get the 3% for Robinhood Gold members and then 1% for non-Gold members. So Robinhood, of course, was sort of like a meme stock, right? And it actually bottomed out. And if you had bought it not too long ago, and you could have waited till some rough guidance, some profitability, but you could have waited a while. It actually did nothing for, since 2022 all the way to the end of 2023. And right at the recent October bottom of the market, where we had many stocks rally from that low, Robinhood has since returned roughly over 100%. And so let's get the exact number, 148%. So not too shabby. And so some of the investors out there that were touting, let's call the sillier stocks, the more retail oriented stocks, this one has done really well if you had bought it around there. And you can see some of the changes, of course, that the business has undergone in terms of new capital inflows, the benefit of higher for longer, potentially, because if you actually look and break down their earnings, you see that a lot of it's generating from interest revenue. And at the end of the day, for example, let's take the 5% interest rate that they offer you. They're still be able to generate a spread. And so they can make money off of the sheer volume. So if there's a lot of people, and I'm trying to think about how I would use a product like that, but if there's a lot of people putting their capital in there, they can still generate a spread. Now, recently, they announced a new, and I think this is potentially going to be very costly because it's got people like me interested. and I'm starting to even think about, okay, I have capital here that I'm generating just under 5%, like 4.95%. And I can take that and I can throw it in here and still get FDIC insurance and all that jazz. And then I can also, on top of that, get an additional 1%. And I should have explained the product first, but they announced that they're going to offer 1% on all matches across the board for Robinhood Gold members. And so you can kind of do the math of how much interest it'd be to kind of get in excess of $60. So if you're moving a good amount of capital, you can get a decent amount of just 1% right there. But it's not all at once. It's paid out over 24 months. And so if I think about it, they're still probably going to make money off of my capital. They can still probably generate a spread there. You could argue, for example, well, you could do your own ways of generating interest, right? You could do SGov, you could do money market, you could do box spreads. For shout out to some of you who enjoyed that one. But there's other ways that you could generate interest on that capital. And for someone who might want, like, for example, a savings account with FDIC insurance, it makes you feel better. Robinhood's a good alternative because they insure up to 2-point-something million. But the 1% is actually interesting because now I could generate the 5%, all else being equal, plus the 1%. So that gets me to about 6%. Interest rates probably will come down, so I might not get that. But, you get the idea. So it actually is compelling. Well, before I had no reason to use Robinhood. There was no compelling reason. And I always view every platform as, okay, well, why would I use you? What are you offering me? Certain platforms offer certain perks depending on how much you eventually accrue with them. But Robinhood didn't really have anything to offer. And in fact, if anything, they were a nerf on some of the tools that other brokerages offered to their customers. So, for example, they tout having Morningstar. Morningstar is like so standard. There's that. I think that's like the base level that you should be offering, but they use that as like advertising. So people who don't know any better think that that's, I don't know, great or something. And then as far as some of the other parts of customizability of changing the tax lots, that's actually important. I show, for example, my club members, a lot of times it's investing depending on how maybe what your tax situation is. You actually start to worry about, well, do I incur a taxable event or not? And just having that tool to be able to customize what lots are sold and when is huge. And of course, there's the elephant in the room. There is the Robinhood credit card. And if you guys don't know this about me, I am also a credit card enthusiast. I like to min-max. I have one annual fee card in my wallet, and that's the Amex Platinum. The other cards are all no annual fee cards. I'm a huge fan of cashback all the way. This card is interesting. It kind of has an annual fee because you have to be a gold member in order to get it. But you get a good amount of cash back, which is well above the typical standard of the catch-all card. When we say catch-all card, there's the 2% category, which was the Citi Double Cash when that first came out. And that set the standard, 2%. And so a bunch of cards then came out, 2% standard. Then you have the more typical 1.5%. So then a lot of people say, well, I'll just go for the 2%. You have, for example, the Bank of America system that actually gives you a boost. So the more money you have with them, the more of a boost you get, up until the, what do they call it? Platinum honor status. And then now they have diamond status. But now with this card, you get 3% across the board, and then 5% on travel through their portal. That's the keyword. Through their portal, you get 5%. They're probably going to make money on that 5%. The 3% category on everything, I doubt they're going to make much there. And so kind of bringing that and comparing it to other bank out there, you do see that, for example, like American Express, if you're a merchant yourself, you might see that on your own end, how expensive American Express is, because the American Express business model initially, they've kind of deviated away from this, but initially was more so on the charge cards. And what a charge card is versus a credit card, if we want to get up to speed here, is a credit card that you're not supposed to carry a balance in, or the bank disincentivizes carrying a balance in. Before, you straight up would lose the card if you carried a balance on an American Express Platinum, Gold, and Green card, because those are the 3 charge cards that they have. And then American Express came out with credit cards. So again, there's 2 distinctions: credit cards, charge cards. The charge card behaves almost the same as a credit card, except at the very end of the month, you are meant to pay the whole thing off. And the charge cards, again, the 3 products that you're familiar with or you might have heard of is the Platinum, the Gold, and the Green. So American Express initially, their bread and butter was they would make money from the annual fees, and in addition, the swipes. they wouldn't want you to carry an interest on it. Now, the credit card business model, you still make money from the swipes, but typically the annual fees can vary. You have some higher annual fee credit cards out there for sure. For example, I can point to the Chase Sapphire Reserve. I think it's like $550 now. So that's a high, and it is also a credit card, so you can carry a balance. There's nothing that they're going to stop you. They'll be okay with that as long as you pay it. And they'll generate also interest income. Now, Robinhood here at 3% on everything is also, it's a bit aggressive, but in a good way for the customer. For them, I don't see how they're going to make too much money because points are different. So typically the points system for banks, they are able to still make money off of that when they offer you 5 points per dollar, for example, because they go out and they buy these products or these perks from let's say hotel brands, et cetera, and then they can make that interchange. And so typically when they buy it in mass, they get some sort of discount, and then they can still generate a spread there. But cashback is cash, so it's a little bit more difficult. And so typically you see the standard again of like 2% is the catch-all, and then they have the 5% rotating categories or 5% on one category, and there's always limits. If you notice, there's always limits. 3% unlimited is kind of interesting. Okay. So there's always a catch when they offer more than 3%. That's the thing. There's always a catch. So even Bank of America, the red card, is 3% category on one of your choice, and there's a limit. This is 3% on everything, unlimited, from my understanding. I could be wrong, and someone correct me in the comments section because I sometimes get these wrong. But I recall it's 3% unlimited. And why that's such a big deal, here's my part for the monthly high dividend. Thank you, Andrew. Thank you. Of course, you guys can ask questions on monthly high dividends if you want. So this is going to, I think, change for the better or for worse, the credit card space. Robinhood is coming in here and saying, we don't really care about making too much money from the credit card. Now, my question is, who are they targeting? Are they targeting prime or subprime? I'm going to actually lean on, without knowing yet for sure, that they're going to lean on the subprime category of credit card. So that means that they're going to go for people who are probably carrying a balance, because Chase Sapphire products or the Chase products typically go for prime along with American Express. So you have like them as the S tier category. They give really good credit cards, really good perks, and they typically like to go for the top end of the market. And then you have the other credit card companies that kind of go for the middle to the lower side. They'll take the top too. Like if you good credit score, you can go in there too. But they like to target the other categories. So like, for example, when it comes to mine, Citigroup, typically you think of Citigroup, you think of they go for more of the subprime or lower down the totem pole customer base that might carry a balance, et cetera, lower credit score. They'll take you if you have a lower credit score, but Chase won't, or American Express won't, or they'll be harder to convince. So, and then subsequently, when you look at the charge-off rates, it falls in line along with that. So Chase typically has the lowest, along with American Express, and then you go a little bit higher down the road. And then if you're trying to analyze how is the consumer doing, you can take that into consideration when you're looking at each bank. You're like, okay, I'm looking at Citigroup. What is Citigroup going to tell me? Citigroup's going to tell me, okay, how is maybe the lower middle income consumers doing, the one who may carry a balance more. If I look at Chase and I don't see charge-off rates, well, obviously I'm not going to see charge-off rates there to be too extreme. At the most that they'll have, it's going to always be typically lower than that of Citigroup. You get the point. So I want to see who they target. Okay. I'm going to put this up here. That's funny. All right. I see everyone's getting excited for ICOM. Credit cards are not passive income. No, they are definitely not. But anyways, so I think that's how they're planning on making money with this card, is people carrying a balance. And then, you get the Robinhood gold fees, and then they want you to bring that capital over, and then they can make money elsewhere. So they make money obviously from the transactions from crypto when you buy and sell crypto. They also can generate income from selling your trades, so order flow. And again, that they'll benefit from the volume, the sheer volume, and then your idle cash, they can generate a spread on that. So really the game here, I see it, they just want volume. They want to grow their asset base as much as they can, and then the money will flow. And I think that's pretty good. I think it could work. I genuinely think it could work. Now, interest rates, where they come into play, is a bit of a up in the air question, and I do think that the main concern for me is the 1% on everything and what that might do to profitability over the short to medium term, and if they're going to be able to keep it. Because again, like, I look at it and I say, wow, okay, so 5% plus 1%, and I can just throw my savings in there. That's pretty compelling. But I won't use it for anything else because I don't care to. And then I might get the credit card. Why not? I have a 3% cash out card. I don't really, it actually, that would replace my Bank of America catch all card that gives me 2.25%. So that'd be pretty good as a replacement. And in fact, that would actually be quite useful. I would definitely use that. So, because I am a min-maxer, but that doesn't really make them win. I wouldn't use them for the travel. I don't really care for it. And I don't know if they're going to be able to make money off of the 5. They might. I think actually they would be able to still make money off of the 5% back, just because that's actually a pretty standard business model for most of the banks. If you see, like, for example, Chase, when you go on their travel portal, they give you like a bonus points for doing it. And same thing with American Express, et cetera, all the banks pretty much. Okay, so enough with the credit card. Holistically, I think the move is really good. And so if you're a Robinhood shareholder versus other fintech, you could feel pretty good here. And why is that important? Why am I bringing this up? We said that we would go into adjacent businesses. Well, there's another business that I think might have some people panicking, and that's SoFi. So if you actually look at the SoFi verse of all the people that talk about SoFi on the internet, a lot of them are talking about Hood, a little bit concerned here and there, maybe not. Remember that, we can talk about SoFi a little bit more here, but there's some things that might be good about SoFi right now, or signs that it could be good. There's been some relative signals that personal loan delinquencies aren't really that big of a deal right now, but there's some problems. Let's first start talking about the notion of the high credit score. I see that all the time, and I think that's really interesting to begin with, because a high credit score, I think with anything investing, and you guys know this if you watch this channel, everything is nuanced. Everything is nuanced. Every single detail can be nuanced. So we got to look sometimes a little bit deeper. It's not just someone gives me a statistic and I just go, oh, yep, based off that, this is good. Every scenario can be different, and so we have to analyze it within its own vacuum. So when I'm looking at a personal loan, right? Let's think about this kind of logically. Let's take a step back. I'm going to lend out a personal loan, or no, put yourself in the shoes of someone who needs a personal loan. What's going on with you? Something's going on with you. What is going on? Something that needs you to get a personal loan. And so what is a personal loan? Well, you have personal loans for a couple of reasons. Debt consolidation. What does that mean? You let your debt get a little ahead of you. And so does that credit score really if it's a high credit score, does that credit score really tell me you're that responsible, or that something might have happened? Something might have happened. And so that credit score is maybe indicative of your past behavior, but not indicative of the current situation, the current risk that I'm taking on. This is just kind of to illustrate, you didn't really need to go this far in the thought process to, first of all, understand that personal loans, unsecured personal loans, are really high up the risk profile in the banking segment. And banks don't really want to compete for that. If you look at all the major banks, they don't really care for that. And at the end of the day, a bank's business model is it's simple in a way, and it's complex in another way. In a simple terms, all a bank is doing is generating a spread. They borrow money at a certain rate and they lend it out at another rate. And then hopefully they get more money back at those higher rates. Then they lose money, and then they're able to pay wherever they borrow the money for, whether it's depositors, whether it's other banks, et cetera. And so all they're doing is generating a spread. They're in the business of selling money, and then they lend out more than oftentimes what they have. And so that's the leverage that a bank can take on. SoFi has a high cost of capital in the sense of their depositors, and then lends out at much higher interest rates. But that higher interest rate product is a much more dangerous product than that, of a mortgage, et cetera. And when they start to compete in the mortgage business, that's when they start to compete with the people who really matter in the banking space. So, and if you look at the credit card product, a lot of the bulls say, well, yeah, you can't really take that into consideration because, of course, we bought this bank and that came with all these legacy customers. And so, we can't really look at that as a fair comparison. Fair enough. But even without that, we are dealing with something that the delinquencies seem to be rising in the personal loans in their personal loan products. And then when we look at the different statistics for the technology growth, remember that Dan, I saw you in the chat earlier. We did a live stream in 2023. It was Q2 of 2023. We stated in that live stream that the technology business is likely not to continue on its current growth trajectory. And so there's a couple ways you can think about this logically without actually delving a little bit further, just kind of what the thought process could be as to why this might be the case. So SoFi, the idea behind it is that they acquired these different technology companies, Galileo and Technisys, so that they could also save on costs. And then they could offer those services to other banks or fintechs or neobanks, and then they could generate money that way, right? Yet another business. So imagine that you have a business and then you do something else for your own business, and then you are trying to then sell that product to your competitor. It's a little bit of a harder sell than if I come in and then I'm independent third party and I have the same kind of product that you have and I try to sell it. Now, the benefit of once you're in a financial institution is that they're very unlikely to switch. That is also true. We talked about that when we looked at other fintechs that service banks. Banks are really reluctant to switch because if something is critical or it's working, kind of ripping it out could cause a lot more problems than just keeping it there. And so it has to be really compelling for them to switch. And that's often a benefit of software or SaaS businesses that cater to banks. And we could have looked at nCino as an example, but they're actually, well, they're still public now, but I think they're being taken private. So the SoFi space, or the SoFi as business, I think Robinhood is actually one of their customers, which is kind of ironic because now Robinhood comes out with this product that I think really caters to the SoFi customer. And I think both financial companies are catered to the beginner of anything, the beginner in their finances, the beginner of investing, etc. Beginner all the way through. Now, when we're looking at the products that Robinhood offers, for example, margin loans, I think margin loans in mass are much more attractive than unsecured personal loans because you can get, or they will just pull the capital from your account. And so it is a secured loan. And the interest generated there is still decently attractive. But for the most part, I think it's a superior product. Now, SoFi, I imagine they also do margin loans because it's a fairly common product for most brokerages. SoFi has a broker inside of them, but their bread and butter is still just going to be personal loans. And then prior to that, it was student loans, which I think the student loans business is a bit more attractive, but also a little bit hairy. It can be hairy. So all in all, the summation, there's a lot to talk about here because the SoFi bulls, I know that they've been invested in the stock and some of them are a little bit misleading. You guys can imagine which ones are a bit more upfront and honest. For example, some of them actually show at least their percent allocation because that's actually the bare minimum I think that, is okay to ask for, right? You have someone who's saying that they have this philosophy, this is their investing, etc. And then, okay, when they show their percent allocation over a period of time, I respect that. And some of the SoFi bulls out there do that. And I give them props. And the way I know some of them, for example, do it on Twitter. And so you might find them and you say, okay, you know who I might be talking about. They have it as a pinned comment. And then you can even see it across time, which I think is fairly helpful because at least you can see, okay, more or less what they've done. It could be better than that. They could show the percent return per the broker and all that jazz. But some of them hide behind a veil of not wanting to show you the dollar figures. And it's like, well, you don't need to do that. That's not what people are asking. Can you explain your channel and understand? It seems like you're a nice guy, but then most of the audience is idiots and the rest trolls. I don't think there's any trolls in here. But can you explain the channel? Oh, I'm telling my trying to think. Went into debt to buy SoFi. Yes, he did. I don't see any troll comments. I had to address your comment because it's a super chat. I gotta talk about income. Oh, yeah. Oh, so we're not. Oh, okay. I guess I get the joke. So yeah, we're not a channel dedicated towards blind income. Philosophically, as an investor, I believe that the only thing that matters is total return. And for club members, they see this more or less firsthand. Total return matters first. Income becomes sort of a byproduct or consequence of that total return. It's something that as you grow the portfolio, the nominal amount that you can generate with less risk becomes larger and larger and larger. And thus, it is, in my opinion, a waste of time for an investor to prioritize high yield or income. It's in fact probably a detrimental strategy over any point in time. And in fact, I think that the rise of dangerous products that are preying upon the less fortunate, the less educated, and kind of all three plus older folk. So the other two categories plus the older folk is really problematic. And you guys probably know we've kind of made some content on those products, but I rarely say that government should, I don't like to say that, but this is maybe one of those instances where the government maybe should step in and say, well, what is your purpose? Because those are products that are just, I don't really see a purpose for them, because they serve no not even like pretending to generate a superior offering, superior return, lowered volatility, nothing like that. It's I don't know. It's frankly idiotic. But anyways, enough of that. So this channel focuses more so on developing a community, and unfortunately, I haven't been able to have a public face. I've only been doing live streams. The videos really have taken a back burner because I focus mostly on private content. That's true. And so the general idea of coming on YouTube in the first place was to sort of offer a different perspective than what I saw back in the day, and which I felt was problematic, maybe a borderline, sometimes dangerous, depending on your perspective. But yes, for the most part, just kind of putting it out there. And we grow as we grow. We're not here to make allies with scammers. We're not here to sell courses. But yeah, just building this community and trying to spread at least that message now, because that message is more prominent. I usually didn't have to emphasize this, but now I do, I guess, that total return is all that matters. And then don't worry about that. Income just comes naturally. It really does. Trust me, it does. Club members, if you're out there in the chat, which I see plenty of you talking, you guys can say, maybe if you want to confirm that and say, yes, guys, the income is just natural consequence if you focus on total return, and it's more sustainable, in my opinion, because the other way you're going to go down a dangerous rabbit hole. Okay, so that's addressing that super chat. But anyways, back to the comment here, or back to the topic here. SoFi, the content creators around here, there are some that have said, yes, they've taken on debt to buy SoFi, and then suddenly it's not their largest holding, and they sell courses on how to 10x your money, but they have no evidence of them 10xing, and they refuse to show evidence of them 10xing. And they might even say, something along the lines of, oh, I don't want to, reveal the amount of money I have to family and friends. And then the person didn't ask for that. The person asked, can you show me percent allocation? Because, for example, my personal holdings that I show here publicly on YouTube that we're going to cover today, it could be $1,000 portfolio. You have no idea. It's up to you. Your imagination can run wild. It could be $1,000. It could be $100. It could be $1 trillion. Who knows? But at least where I'm coming from. And then you can watch it across time, which is the most important thing. So you can see the old ones, and then you can see how it's progressing. And then the club members, they see, brokerage account for my holding code, not for my personal holdings. And so they have an idea of maybe what it is, but still, it's unknown. Fabio, your watermark, the bottom looks like a smudge on the screen. Which one? I can't see at least on my studio. Looks like a smudge on the screen. I don't see it on my end. I don't know if maybe that's the internet connection, how you're seeing it. If anyone else can also see that, then I'll try to figure out how to prevent it next time. But I don't think I can stop it, whatever it is. My eyes is messing with me. Okay. No, it's probably there. But yeah, let me know, everyone, if that's also the case. Okay. So yeah. And then the other part about SoFi here is you got to understand that the true cost of investing in this company was also opportunity cost, because you invested in a business that the performance, frankly, has been abysmal. And again, I think there were plenty of signs that there were other investments that could have drawn your attention to. And I really did not understand why through and through. Shout out to all the content creators out there that were consistently, that's the keyword, consistently skeptical to off-putted by this company as an investment opportunity, because you have done very well. If you had avoided this and not kind of been blindsided by the sudden attention for retail for a bank, which is, again, hard to understand, there were plenty of other opportunities out there that you could have generated immense returns. And again, you guys probably don't need to be reminded on which stocks out there have done really well. So let me finish off with the poll that I asked you guys. And I asked you guys a poll, the simple question: do you have a Robinhood account? We're going to end it. And it looks like there are a good amount of you that do have a Robinhood account, roughly 31%. The remainder do not. So with this Robinhood account question, I see that, okay, there's a good chunk of you that do. And I think there's nothing wrong with Robinhood at all. If used responsibly, there's nothing wrong with it. The gamify, nature of Robinhood, like, that's on you. That's on you if you can't be an adult and handle the responsibility of what investing is. Investing is an adult's game. It's not gambling. And so if you fall for that, that's on you. But if you're looking at it as a product that you are buying and holding for long term, who cares if they sell your trades? Who cares? That doesn't really matter in the long term. If you're trying to day trade and use Robinhood, well, that's on you, right? But if you're looking to accumulate assets over a long period of time and you like the UI, there's nothing wrong with it. The only thing I have to say is there's other products out there that might offer you a more compelling optionality when it comes to, certain products inside of it. Like, for example, maybe doing more complex options trades. Maybe you have a huge portfolio and you also want to control for taxes and you want to sell certain tax lots. Robinhood could include that feature in the future, but currently it does not. There's a bunch of other things out there that I think you could explore first. But, like I just said, Robinhood has now offered something compelling that I think everyone could consider, which is, okay, you're going to give me 5% on cash right now, plus the 1%. Okay, that's something to think about. It's not something I'm going to do for sure, but something to think about. Okay, so I have it, unfortunately, but $0 in it. Meta, guys, we all know. Well, there were plenty of other ones besides Meta. I think Meta was obviously the most material for me, but there were plenty of others that did fairly well. And then, they got overshadowed, absolutely, because I think from the top companies in the S&P in terms of performance, it's like NVIDIA and then Meta. Meta was in the top 10. SMCI was in there. And so just having one of those top 10, and of course, having the allocation we did, yeah, of course, I get it. But there were plenty of others, is what I'm getting at. There were plenty of others. Okay, so that topic we've covered. I don't know if we want to do the portfolio update or the Tesla conversation. But let me quickly see, because I did get a DM of sorts. So let me just make sure this is not an important DM. Coney is a dog. Well, not many know me by that name. Spilled some water by accident. All right. Let's see. Yes. Yeah, you can ask me credit card questions. Like, again, Fanatic. It's platinum honors. So if you have platinum honors, but platinum is the so you get the 2.25%. Oh, sorry. I said 2.25, 2.75, because it's the 75% category, or the 75% boost. The 2.25 is when you have the platinum, which is the 50 to 100, and then the platinum honors is over the 100, and then gold is over 20. And I actually say for Bank of America relationships, I don't think it's worth it until you have over 20. And you don't have to have it in like a savings. You can put it into Merrill, for example. and then that counts for that. So that's the interesting thing about Bank of America. The other bank that has a similar product offering is Truist. I forget what their percentages are. And then yes, the 1 million is the 1 million and above is another tier after that, and that's the diamond, and that one doesn't give you any additional interesting benefits besides reductions on loans. It just basically from there on, the perks aren't pertaining to the credit cards at all. So as far as like what we were talking about, that's really what sort of matters for the Robinhood credit card comparison. And the rest of the benefits are mainly just for auto loans, home loans. They cover your closing costs, etc. So it's useful. But pertaining to the credit card stuff, there's not much. Chase also has some compelling products after you reach a certain level, and good customer service as well, some good dedicated members for you. But I think personally Bank of America's is a little bit better, but they target that, so they focus more on that. And then Truist tried to copy Bank of America, but I last time I checked, it just wasn't as compelling to build a relationship with them. So I kind of just stuck with, I have JP Morgan, Bank of America, well, not JP Morgan, Chase, we'll just say that, Chase, Bank of America, and then I have a credit union, and then I don't have a regional bank relationship, but I have a credit union relationship. So that's also kind of on another conversation, the kind of trifecta, because you don't want to ignore credit unions. You can get some really good deals. When it comes to loans, though, I got to be honest, there's actually some other ways of acquiring capital or loans that are kind of interesting, but we won't get into that. So the credit card is now able to maintain 3% on all purchases, but you got the Goldman Sachs suffering all that type of style credit card from Apple. You losing a bill. Yes, well, they're out of that. They're out of that. And that's the problem. That is the problem. But the Apple card was 2% when you use it on Apple Pay. I have these too many percentages to memorize, too many reward rates to memorize. 2% on Apple Pay, 3% when you used it to buy an Apple product, and then 1% on everything else when you swiped the card. But it was 2% on Apple Pay. And yeah, they lost money on that. That's where it gets interesting, right? Who are they targeting? Okay, so I have a question here. Is it a good idea to take out 70K margin for yield max? I assume that's what that means, the yield max. No, that's probably one of the most moronic things I've ever seen someone do. Well, this tells me you spend a lot, but it depends. If it's the business one, that's not actually that much of a flex. If it's a personal one, it's a little bit more of a flex, but it also means you spend a lot. I think you have to spend on your personal Amex Platinum card about $250,000 within 1 calendar year, and then you get invited for the personal one. The business one is actually a lot more common than you think. Because business expenses, you can just run business expenses on your Amex, and then boom, you'll get it's a lot easier. It's more attainable. So that's actually the key. If I had seen that video, I don't know what the video is, but if I had seen that video and if it's the business one, he's kind of like, it's a soft flex, but it's kind of like a weird flex. But if it's a personal one, that is sort of more of a flex, but it's kind of a shallow flex, if I'm being honest. So I forget what the annual fee is on the black card, but you have to be spending a lot. But the goal isn't to spend; the goal is to save, not spend as much. Okay, so that was all the question there. So let's move on to portfolio update. There's actually quite a bit to discuss. Okay. I'm pulling it up now. And actually, this reminds me, let me just publish it for the club members so they can follow along. Or republish it, just reshare the share, publish to web. We want to embed entire document, web page, publish, automatic, and we can copy this. Let me go. All right, so if you're in the club, you know what room to go to. So just scroll right below the recent holding co update, below the brokerage statement, or not statement, screenshot, and the link should be there. And then we'll just follow along. Good thing I remember to do this. All right. We have it. No hate. I agree with your previous commentary, then still agree with you now, but unfortunate timing calling that at the lows. Which one? After 100% run, no longer bearish on company that generates all of its. No. That's not what I'm saying. I'm not investing in Robinhood, but the product is interesting and what it pertains to kind of adjacent businesses who might not be offering as a compelling of a product and have similarly troubled business models. If you interpreted all that as a let's call it advocation for the stock right now, and that it's some sort of incredible opportunity or value, no, absolutely not. There is so much better out there, but it's sort of like a congratulatory remark to all the investors that did invest when it was going nowhere seemingly and was quite low and was, I think, trading below its cash value, because the concern at the time was, of course, they're burning all this cash, and if they're generating all their money from interest income, which I did address, by the way, that if interest rates were to fall, that would obviously put them in a problematic point from an income perspective. They won't be GAAP profitable. So yeah, I don't know if you got to saw that part of the commentary. So no, the entire section on Robinhood is focused on congratulatory to all those people that did it, not an endorsement of the stock or the investment, and how that might affect some of these other adjacent businesses that cater to the same audience. Because at the end of the day, SoFi is also competing for accumulation of assets, because their idea or concept behind SoFi is they could monetize you in other ways. Well, Robinhood can also monetize you in other ways if they get you in. And I think, for easier than what SoFi does, because most of the time, a lot of the people that come into SoFi may not even use some of the other products. They might just come in just for the high interest savings account, which you can get higher elsewhere. So that's the main takeaway. Going all in, free thinker SoFi. Abso-freaking-lutely. All right. So let's go over the portfolio update, and we'll go over all of the recent changes. So share this tab instead. There we go. Okay, so nothing's changed really at the top. The only changes that happened were we added some new positions, and we added some more to some existing positions, and there was a lot of selling. So we cleaned up the portfolio quite a bit. So in terms of performance, some highlights, some really good ones since the last update, and has been Crocs, right? So Crocs has moved up in the world, and quite nicely, to say the least. We're at $143.80. I also, I'll say it here on YouTube. So I also did enter I sold put options on Crocs, but I don't really want to get into that here. If you guys want, ask questions here, and then I'll get into it. But otherwise, I'll skip over that comment. And then some of the other investments that kind of fit the data center narrative, VRT Holdings. So you haven't seen this on YouTube, the club members, this is not new, but just a quick rundown on Vertiv. There's no video, but there's pitches within the whole within the club on this. So Vertiv, they basically are a data center cooling play. So one of the main constrictors of data center development is cooling. And one of the more direct plays that I had that's panned out quite well is Sterling Infrastructure. So that's been one of the investments that we made. You know, you've already seen this in, I think in the last or update, or the one before that was when we first covered it. That's my more direct play on the data infrastructure build out. And then there are some adjacent plays. So some of them that are new that you might have not seen is Quanta Services. Again, the pitch is in the club, but basically the highlight there is that they're an engineering firm that services the utilities and helps them build out the infrastructure. Kind of, again, playing on that idea, the main constrictor of new data center build out in many cases. And this is looking at different earnings calls from CEOs, some interviews from CEOs like the CEO of OpenAI. One of the main troubles that they're coming up with is power. And then some of the on the low side, Palo Alto, we add a little bit more Palo Alto, but nothing actually noticeable. Disney, also a little bit more there. You might notice that the cost base is slightly harmed, but we're adding up to Disney as per the last update. And the BTI is one of the newer ones. So I got to address the elephant in the room. BTI, I've actually delved in a little bit to a cigar butt investing, pun intended there. Then across the board, there's really not been much change. Uber's been sold off a little bit, so we started trimming off Uber. And the big sells, that's the main thing. One thing that didn't make it from update to this update is Vistra, but I'll talk about it. So Vistra lasted in the portfolio literally up until today. So Vistra is now gone from the portfolio, but I'll talk about it anyways as far as like what it was meant to be. It initially had a small allocation, and when we got out of it, basically there was some discussion about the real fulfillment of demand for energy and how Vistra might not be the best play to play that need for demand. So Vistra, they're a third-party energy provider. So there's utilities, and then there's companies that produce energy on the side, and they sell into the network, and they make money that way. They're not the utility companies that we think of, like Southern Co, Duke Energy. They're part of the overall system, and typically they've traded at really low multiples, but a lot of them have actually performed exceptionally well. And the thought process is, well, maybe there's going to be a lot more demand potentially for some of their assets, especially if they're clean energy. And you can look at Constellation Energy Group, and what the agreements they formed with companies like Microsoft to provide them energy. So that was the initial thought. But I actually sold out of that position, so it didn't last long. And then some of the positions that are gone is Zillow Group. So Zillow Group, the thought process behind that is I think that it could be dead money for a while due to the noise and how they're going to navigate the recent lawsuit or the settlement with the with regards to the commissions for real estate agents. So I think that there could be potentially an opportunity in the future to add in, and I would like to see some more color on that. Now, US Bank Corp, I had to get rid of that one. I got rid of a bunch of the ones that we see down below because I was just trying to clean up the portfolio. So we'll go through each one. Nothing's wrong with them. I think US Bank can still do pretty well from here, and it played a beautiful role within the portfolio. We did a good return, and including dividends, we did better. But I had to go. I just wanted to focus in on different ideas and concentrate a little bit more, raise some capital, etc. So Digital Bridge, wow, that one was a really good one, pitched by Andrew initially within the club, one of our analysts. That one was another tough one to get rid of because it was a really good play. There were better plays on data center, absolutely, and there were better plays in private equity, absolutely. So it wasn't the best play by any stretch, but it was sort of like fun to watch them turn the company around. And I think that what they have planned out for the future is really good. So it's not a say that I sold them because they're bad. I think they can still do quite well. And so if you're still a holder in them, congratulations to you. I think they can still do quite well. There's a lot of tailwinds for private equity. There's a lot of tailwinds for the asset class that they have. And there's a different approach to, of course, how they are involved. They don't have direct ownership per se. They do it managing assets. CRH, another very good business. Sold it. Might get back into that one, but that's an infrastructure play. I won't get too much into CRH, but they're a lot to do with the, let's call it full service, from mining the materials to actually building out a lot of the infrastructure that you and I experience or use in this country. And so if you're a believer in the infrastructure spending over the next 10 years, then companies like CRH and even Sterling up there, they have a long runway ahead of them. AstraZeneca also has, and I sold it because that one I wanted to, again, consolidate into other positions from people who are more knowledgeable on the pharmaceutical space than I. They have fully endorsed AstraZeneca. They have endorsed AstraZeneca's pipeline. They've endorsed AstraZeneca's culture and capital allocation policies. And so there's nothing bad to be said about AstraZeneca. Like, as you can see, none of the ones I'm selling, besides maybe Zillow, is a sell, and Vistra is a sell because of lack of confidence. It's just I wanted to concentrate into other positions. So it's a little bit of a different portfolio update than sometimes you're used to, because it's not that these companies did anything bad. Okay. And then Northrop Grumman, same thing. That one's more of an evaluation. I just wasn't too attracted to holding it at this valuation, and I wanted to concentrate elsewhere. Now, some of the other ones that I don't want to accidentally skip over, but I won't cover too much because I'm kind of skeptical about their size and covering them too much. But there is a newer speculative investment in High Tide. Won't get into that one in this video, but if you're curious, go look into it. And then there's the Allison Transmissions, which is more of a buyback play. Allison Transmissions has rallied quite a bit, so we actually got into the stock a bit late, I'd say. And there were club members who were invested in this since the 30s, and they've done really well. And I congratulate you guys. I'm getting into it a little bit late. It's sort of like the spiritual successor to Murphy's USA, one of our former investments that you guys might have remembered from back in 2022. And thank you to Chit Chat Stocks for having me on to have the public pitch, because I wasn't pitched publicly, only within the club. And they were the first ones to actually host us for a public pitch on Murphy's USA. And then as far as the Coupang's one I do want to buy more of, but really I've been just trying to focus more on my other ideas. American Coastal Insurance Corp, I have been adding more to this one. And I probably will continue to add more to American Coastal Services in the coming weeks ahead, but not next week because I'll be on vacation. And that pretty much covers all the update. That's the main changes. So other than that, let me know if you guys have any questions on that, and then we'll move on to the next topic. So let me go through the questions. Okay. Go Pelicans. If Paul was pumping Starbucks. CHD is Dan approved. Good night, Ryan. Starbucks is fire. Rick, VTI. I ask you need. Okay, so there are no questions so far on this. Okay, and that's good. That means I've explained myself decent. Oh, can I talk about KRC? Absolutely. So let's go over KRC. So KRC, honestly, it's really underperformed a lot of our other picks. So within the portfolio, it is a dog, and it's really a play on the perhaps over pessimism of office. And I really do like this play. I like it more and more. And I was able to kind of touch base again with a old friend of mine, lives out there in San Francisco, works in the tech space, and tech space specifically in real estate. So not actually like a programmer, but they don't do commercial office real estate. They do residential. And so a lot of the reason why they work in the tech space, I say, is because they're in neighborhoods that service a lot of the employees for tech. And so they have like a pulse, I'd say, on how the tech industry is doing in San Francisco. And what they've told me, this is super anecdotal. I mean, it's not something I'd bet the farm on, but they said it's recovering. And so we see ebbs and flows. Then kind of also, let's say, adding to that bias, or not bias, but thought is I got some articles and videos shared by a current resident in San Francisco who's a club member of ours. And he personally said that he sees the city kind of revitalizing itself. And also the articles and videos kind of talked about how the city's also coming back, and that tech is coming back. And so those things kind of line up, but that's all post-investment, by the way. That's not while I was investing in this. So that's maybe more reassuring me. Oh, maybe there's something here, but I could still be wrong. Like this could actually, there's a lot of things that can go wrong with the stock. So what you're betting on here is that San Francisco as a city is not a dead city, and the A-class office properties, they're going to do okay. They're going to do well. The properties in Texas, kind of up in the air, but for the most part, you have life science similar to an ARE. Thesis is that it's going to be kind of siphoned off from the pains of the rest of the commercial real estate segment. And within office, you're going to hope that quality wins out. And so that's Boston Properties, Kilroy, as kind of to name a few. Now, Kilroy's, how cheap is it? Well, it's quite cheap. I mean, it's traded as cheap as having a 16% FFO yield, which is very cheap. When you're looking at it from a book value perspective, it's also trading well below book at a historically low valuation, even that of 2008. So there's that to like about it. With dividends, I've been selectively reinvesting dividends, but what I've been trying to kind of still pencil out and try to keep up with is exactly that. How is Office recovering? How is Office changing? And are they basically, if their occupancy levels are falling well below the average of their market, that's kind of like the red flag signal I'm looking for. And if I see that, I'm perfectly fine with exiting. Right now, it's a positive return, but it's not the best return. And so what I mean by that is there was still a cost associated with investing in Kilroy through the period at which we invested in. So I view it for the most part for now as not a it's not the best investment decision or the best use of that capital, given the other ideas that we had. But everything has a role to play. Even when we include the dividends, it's not that bad. But even including the dividends, it's not as great as where we were deploying capital in other positions. So, especially over that time frame. So that's generally the gist of KRC. What's the thesis on Coupang? How will it compete against Amazon? I don't view it as competing against Amazon. I view it as doing its own thing and dominating its own market. And I think it can be quite successful and do well as a business in their own market for, let's say, a return perspective. Capital markets allocation to Cameco. We'll talk about that tonight when we talk in the club, if you're still awake. But Coupang, Stanley Druckenmiller, it's a quite sizable investment, and we in the investing club, we really respect Stan. I don't see the need for them to beat Amazon. I don't view them as the same business at all. If you're going to view them, Amazon's a better business, hands down, because Amazon has other adjacent businesses that frankly are just better in every way. For example, having AWS inside of that monster is a huge advantage and gives you a lot of capital to work with that you can then deploy into CapEx and then outcompete your competitors. So Coupang within Korea, I think they can be very successful. And if they are successful in Taiwan, I'll see that as a huge, let's say, win. Is it superior to Mercado Libre? I think that Mercado Libre has a lot of potential. I was an investor in Mercado Libre a while ago. And so Mercado Libre, the market that they're servicing is just one I tend to be a little put off by, being Latin America, because there's a lot of things that can go wrong. It's very uncertain. But I think if nothing bad happens, Mercado Libre has way more upside than Coupang. Like as far as the business growth potential, the maximum size potential, it's definitely much better. I can't sit here and tell you otherwise. And Mercado Libre is also they have other businesses inside of there that they're definitely a spawner. So for example, they're a fintech as well. They're not just an e-commerce platform. They're also a fintech. So there's a lot of things that Mercado Libre has done over the many years that they've been public that really have been very good. The markets they serve are just sometimes for me a little bit scary, but the share price performance has been amazing since the very beginning. Okay, so well, I don't know what to tell you. I'm told when I speak Spanish, I have now an American accent. So it's not to you, it might sound like a Hispanic accent, but to people from Latin America, they think I have an American accent. So I'm stuck in both worlds, I guess. Thoughts on adding AVGO to the portfolio on a pullback? I think AVGO has a great management team that has kind of bucked the trend of being a empire builder, but they've been a good empire builder. What do I mean by empire building? Companies that acquire in order to grow. So Broadcom, typically when you see a company do that, it's bad, but Broadcom's management team definitely has an eye for picking out businesses that are optimally positioned. And then they seem to have paid fair prices for them. So that's rare. It's almost kind of like saying he's like the Warren Buffett of semiconductors. He's very good at that. And I don't know if that's a strategy that can continue, though, as they grow and grow and grow, because law of large numbers. As they get larger, how much larger can it get? There's some things about Broadcom that I do like. For example, their ASIC chips division, I think is fairly interesting. So they're the biggest NVIDIA might get in there and get larger, but they're going to spend a lot of money. I think they're investing $30 billion, and NVIDIA is no one. You definitely should not discount them. I don't know. AMD is probably going to get involved too. And then after them is, gosh, they're lesser known, Marvell Technologies. So all those are focused on ASIC chips. ASIC chips are highly specialized chips. They're much better than these general chips that we know, like graphics cards. And in the age of AI, which I am also, I want to be cautious with my AI exposure. I think I have a lot of it indirectly without initially knowing that this hype would show up. Okay. Swag pity fig. Exactly. I don't know what he's talking about with accent. I definitely do not. I definitely have an American accent now. Okay, so I'm diversified in everything you can think of. Absolutely. In I guess in all stocks, Biddy ETF, because Bitcoin sucks. All right. The next topic that we're going to be talking about, bro, you need some Chipotle puts, take some courses, and learn how to hedge your portfolio. Oh, yes. I forgot that person did Chipotle puts. That's really interesting. No thoughts too positive or too negative, but I can appreciate the company that they've built. I know it's not the answer you're probably looking for, but okay, so let's get to the next topic, which is most exciting business inside of Tesla. So Tesla bulls, it's not that they discount this, but I think they really underestimate how important this business is versus everything else. And again, going to that theme, what I was talking about with the portfolio, and keep in mind, we were discussing, and let me come back here. We were discussing how during the period that you guys, well, between the last update and now, there's been also an adjustment of focus towards data center, but also data center centric plays. One of them being addressing the power constraints. And Tesla has a business inside of them that has the potential to solve some of these problems, if not most of these problems, potentially. And that's the energy business. So, but the energy business, I would not pay $550 billion for that. No. If Tesla spun off the energy business, which I think Tesla bulls would hate because I don't think they ignore that business. But if you actually see the recent growth, the Tesla Energy has been the best growing business. That would be probably the most interesting business inside of Tesla. Arguably, why would they spin that off? That all that kind of melds together, and the energy business is what it is because it tried to solve a lot of the problems for the electric car, and so one kind of gave birth to the other. I get that, but I'm just saying that the most important business inside of Tesla is definitely the energy business, and even at today's price, this is going to segue into the final topic, which is we have the YouTuber Meet Kevin, who apparently I think sold his Tesla shares again. Please check, correct me if I'm wrong. But did he sell his Tesla position again, his entire Tesla position? The Tesla bulls, they're mainly made up of in retail investors. Granted, we all know that. And they've had a rough, let's call it 3 years or so, because most of the Tesla investors, a lot of, there were some that got here, some of them who bought it before it was profitable, et cetera. But there are tons of them that experiencing this, especially a lot of newer investors, retail investors. They buy Tesla and they think it's the greatest company ever, and it just goes up and they're either flat or down on it. And so I get that can be frustrating. And there's always this Twitter guy that some of the people share with me. He's always comparing Tesla to Meta or to other stocks. And I get it. He's frustrated because his stock didn't go up. It didn't go parabolic, but and Tesla's basically flat or down. So yeah, it sucks to see everyone else make money. But think about the setup that you implied here. You basically grabbed a business that the valuation implies certain successes. You already have a business that's valued more than all the other car manufacturers in the world, I think put together. That when you say the car business, there has to be something else that works out. And I think most honest Tesla bulls say that too. When I've had discussions with them, they say, yeah, they have energy, they have the, whatever they think robotics is going to be, but they say they have other things. Okay, is the point. It's not just a car company, because you cannot say, I think, honestly, that this is valued like a car company. It has to be valued like a tech company that is genuinely going to change the world. Now, I see that as, okay, is it impossible? No. Is it something I would deploy capital for? Probably not. It's not, the setup is not ideal for me. There is a price though, and I kind of want to go over that price with you guys. So the price, roughly speaking, actually begins for me to get interesting. I don't know if we're going to see that, okay? But it begins to get interesting for me at about the high 70s. So if we see that, that's $100 drop from here. I will reevaluate the situation. But until we see that, I don't think that the margin of safety is really here for me. And I know that sounds very Paul Gabriel of me, but it is what it is. I think there's plenty of other opportunities out there. Before I get distracted with the other opportunities and look at something like Tesla, I need to see something a little bit drastic. I want to see this thing get abandoned. I want people to forget it even exists. Because I'll say this, I love the car. I think the car is great. Some people hate the car. I like the car. I like the Model 3. I like the Model S. Model Y is not my style, and Model X is also kind of not my style. And I haven't driven the Cybertruck before, so I don't know. I can't talk about that. The Cybertruck, I acknowledge all of its design flaws, the rusting, and all that potentiality, yada yada yada. But I think Tesla cars are good. I think they're the best electric cars out there, or among the best, easily among the top. And there's a lot of features that they have, I think, that are cool and good and useful. Oh, and trust me, Rob, I got into fights about China risk. Oh my gosh. So I am one of the people that in certain platforms, I will comment and, get into discussions. And when the person starts to use ad hominem attacks, don't worry, do not worry. I will remember you and I will come back. And so there was I think this was a discussion in either 2020 or 2021. And I was in a forum discussing China. And for club members, you probably have seen the photos when I had fun and kind of commented back 2.5 years later. That's kind of that's my style. I like it. I find that fun. So the person and I got into a tussle about China and investing in China and with the problems of investing in China. And if you want to see the screenshots and you're in the club, just ask me and I'll find the screenshots for you. You'll have a laugh at it. There's like really long paragraphs of commenting back and forth and discussing with another individual. And we're going at it about investing in China. And the point is, it was brought up about Tesla. And the guy was like, along the lines of, and I'm paraphrasing. Oh, by the way, this guy writes for Seeking Alpha. So it's like the Seeking Alpha author, and he thinks he's hot shit. But anyways, so he says like, oh, so you must think that Elon Musk is a moron for investing in China. And I was like, yeah, you know what, I actually do think he's a little bit silly for investing in China. And this was before the whole scandals and stuff, because it didn't take someone to think too deeply about this, but China has a history of luring American companies in and sort of figuring out ways to look at their product and say, how can we emulate that product? I'm saying emulate, to not say steal, but emulate the product, emulate their style, emulate how they do things so that we can kind of copy that. So basically I said, yeah, Elon Musk getting into China is maybe a bit dangerous territory. And then that the CCP is famous for also kind of, when you get on their bad side, flurrying up scandals. And so suddenly it seemed like Tesla, not too long after, Tesla seemed to have all these issues, malfunctions, recalls in China, but not anywhere else, but in China, all these issues. And I found that interesting. I didn't comment then yet. And the point of the conversation was at the end, it was for Alibaba, the topic of conversation. He said, oh, you don't know what you're talking about. You should just invest in index funds. And fast forward 2 or 3 years later, I comment back and I say, hey, I hope you're doing well. Are you invested in index funds yet? Because the point is, Alibaba had fallen a considerable amount. and I didn't bring up the Tesla topic, but it reminds me of that. And to say, yes, the China risk for Tesla is quite real. And I think they fostered these companies. They aided in their development. Certain things they weren't able to copy outright from Tesla. Tesla has kept some things secret, but on other things they've definitely took inspiration from Tesla. It is no surprise to me that the most competitive electric vehicles have come out of China. Okay. The most competitive electric vehicles, it is not a surprise, or it shouldn't be a surprise to any of you that it came from China and not another country, is my 2 cents, because it was sort of a mistake. But then what else do you do, right? You want to grow as much as possible, and so you're lured. And the classic China, they lure you into carrot and then they hit you with a stick. So yeah, aside from China risk, is BYD an interesting investment? I think BYD as a business has a good future ahead of it as a car company. I don't like car companies. I don't want to invest in a car company. I think there's so much better out there. I don't see. How will this impact LeBron's legacy? Is investing in Tesla the same thing as investing in Tesla? Great question. No, investing in Tesla is the brain dead version of investing in Tesla, because Tesla is going to, TSL. We don't want this. TSLY. Investing in Tesla is like investing in Tesla, but just destroying your brain cells in order to justify doing it. Let me explain why, for those of you who are seeing this product for the first time. So oftentimes you'll see proponents of this strategy type say that, and don't take my word for it, converse with them yourself. You'll see this for yourself. So do not take my word for it. Tesla is a bad one. It's bad. Ask them. Don't ask them why, because they'll get angry. These people get angry when you ask too many questions. But just listen to them, and you'll notice the thought pattern is very similar. Tesla is bad. Why is it bad? Because it went down. But these other ones, they're good. They don't, again, do not ask them, because they'll get mad. There are many out there that they won't, but a good many of them they'll get mad. Again, for reasons you can imagine why. So like Coney is good. Why is Coney good? And so for those of you who are familiar with Strongman's content, you know where I'm gonna sort of go with this, right? So if I say, why do you think they say Coney is good, but Tesla is bad? I wonder what it is. If only I could figure that out. It's like it's on the tip of my tongue. It's almost like it's right in front of my face. I'm looking at this. It's probably because one's up and one is down. But no further analysis beyond that. So anyways, the point is, Tesla is a structurally challenged product, because in doing this strategy, you are basically guaranteeing you still get the downside of the underlying, but you don't get the same upside. So, I mean, in the realm of finance, that's unjustifiable. It's very difficult, because there are products out there that they do their own thing. They have their own strategy. They're not necessarily tied to an underlying. For example, investing in preferreds, investing in bonds, that's for income. And they also serve a purpose. What is that purpose? Well, I can point that purpose to you, that yes, you are not generating potentially the same returns as investing in equities, but you are lowering your volatility. And so there could be an argument for why someone would want it in their portfolio. And yes, it's income focused. And yes, it's less tax efficient. And even you could say there is dividend growth investing. There is what used to be high yield investing. There was once upon a time high yield investing that was reasonable. And then now there's the unreasonable. But high yield well, actually, maybe there was always a high yield investing unreasonable. But I think now it's like turned to 11. So you had, once upon a time, 8% was considered high yield. And investing in those kinds of companies that maybe are more mature had some form of attraction to it. But when you're telling me that there's a product that kind of follows this other product or this other investment, and it guarantees I won't get the upside of that investment. Guarantees it, by the way. And then I still get the downside, and in many cases, I get more of the downside. And basically, it just depends on how that movement of that stock happens, if it's too volatile or not too volatile, etc. That doesn't make sense in any world why that product provides any value. Okay. And that's where I was getting at earlier, where it almost feels like and I rarely say this, that regulators should step in and say, well, what value are you trying to provide here to the market? Why do you exist? Justify your existence. Of course, I do also fear the ramifications and the potential, slippery slope from that. But just taking a step back there, what is this providing as a form of value? Because there's nothing stopping an investor for buying Tesla and then doing an option strategy themselves, as an example, if they really wanted to, which I don't advocate for most of the time, because you're more often than not going to fuck it up. And the options market is fairly efficient. It's not the most efficient, but it's fairly efficient. And so more often than not, everything kind of evens out in the end. And what you end up doing in many cases is when you actually pick a winner, you're going to miss out on the upside. You're going to play with the soap. You're going to make a mistake. So yes, Rob, that is the true winner of all of this. The true winner in all of this madness is the companies providing the funds, generating 1% off of other people's money. Yes, that is very, very, very true. And I think, if you do the calculation, they're doing 1% off of 2 billion right now. This one in particular, Yield Max. So the products themselves, they target people who want income, but I don't really see the necessity of it. I don't see the benefit of it whatsoever. And again, when you even factor in taxes, the benefits become even more murky than otherwise would be. So, hey, no worries. I'm glad you enjoy it. Jesus, I don't know who said this, but I can imagine who said that. So, yeesh. But the income, in all fairness, the yield maxers, at least they are doing some relative value analysis, which most of YouTube isn't. In what way, Andrew? Oh, by the way, Andrew, you let me know and I can send you the link. You let me know. Okay, so Robinhood discussion earlier was pretty interesting. I might consider the 3% all categories card. I am as well. But for the most part, I think that I have to consider, is it worth the additional effort? Because I would only do it if I was going to move my savings account potentially to Robinhood, generate interest there, get the 1%, and then sort of like also get the credit card, might as well. But with Bank of America, you do get, if you have over 100,000, you get the 2.625, which is not 3%, but if you're trying to min max everything, I guess it's nice to have it. That was comparing Coney to Tesla or Tesla. Yes. You know what we'll do? We'll do like a further explanation, and this usually pisses off the hardcore enthusiasts for yield max, but this is true for anything. So if you grab here, I'll share my screen in a second. So if I show you the symbols and I put TSLA and I show you the behavior, this is going to be true for in any case. It will pretty much consistently underperform the underlying. And so if I go from inception being, let's go 11/25, 2020, 2022. You can see here that Tesla performance, I mean, this is really pathetic. So you're trying to get exposure to this, but you end up you get income, and actually this is a disservice to Tesla. This is the price appreciation, but it's not going to be much better, by the way. the narrative is still the same here. It's just way worse. So you actually start to see that a lot of it's just returning capital to you, not returning capital, but returning capital to you. But yeah, you're down more than the underlying, and you're trying to match the underlying. You got your income, but even when it goes down, because some people have this thought that when the stock goes down, you'll still receive your income, so it will mitigate the losses. Not true. That is false. Stop saying that. And then this will be true across any product that follows a strategy, that it will always underperform the underlying. Even some of the ones that are performing really well now that are not even non-synthetic, because you are, again, selling the upside. You take ones like FEPI, which have these other investments, and they actually own the underlying shares. So they're not synthetic, so they're not forced to recognize losses on the way down. But they still will underperform a portfolio that just allocates it by the exact same percentage of the underlying stocks and just holds those common stock. So that's always going to be the case. So you're getting less performance, but you're getting income. But that if you focus on the performance, I am just telling you, just trust me. I don't know what, maybe you don't trust me, but trust me, income comes along the way. It just happens naturally. Okay, so the thing is, I think it's not necessarily good for Hood. That remains to be seen. Yeah, so there was a comment earlier that was like, oh, why are you bullish on Hood here? And I'm not bullish on Hood. And we already addressed that, and the person thanked me. I saw your thank you, by the way. I'm sorry I didn't bring your comment up. But yeah, I'm not bullish on Hood. In fact, I'm seeing the product. The product is interesting. And as a consumer, I'm like, maybe I get in there. Hard to trust a man in front of a fake brick wall. Sus. Y'all should honestly hit the like button. Oh, thank you. Yeah, I'm bad at promotion. So hit the like button. If you're curious on the club, the link is down in the description below. Yeah, the club, we just added some new features such as we'll call it that's literally the name, the current ideas page, which is basically the month's ideas from all the analysts. And it's not meant to be like, these are things we're buying. That's separate. But it's kind of like ideas that we find interesting and require further investigation. Some of them we do own, but some of them we don't. All right. So, bro, these are good questions. Bro, why buy Tesla when you can wheel stocks and live off the premium with no risk? It's still risk. There's always risk. Every strategy has risk. And the ones with no risk, the return's not going to be that great. And then it's the opportunity cost risk. So any strategy, anything you do in the market has risks. You might say it's less risky. And absolutely, Rob, doing a wheel strategy is going to be less risky than this. This thing is basically you're applying a algorithmic mindset, meaning it's a set of rules. You're going to consistently do something. You're going to sell weekly calls and then some monthly calls, and you keep doing it again and again and again. You have to. Well, I feel that options handled responsibly are meant to be opportunistic. Okay, so it is just like investing, right? I've never sat here and ever told you guys that investing in individual stocks is easy. It's hard. It's very hard. And then on top of that, another layer of difficulty, portfolio management. That's hard. So if you get number one down and you're good and you can get somewhat decent at picking individual stocks, well, now you got to get good at portfolio management. Because what happens if you sell too early? What happens if you buy too early, right? You could have picked a very good company, but you went all in too early and it continued to go down and you didn't have enough firepower to add more to your idea. But you were very confident and you were very right. And so everything's about portfolio management too. And it's just as hard. There's so many different things. And that's where the psychology really comes in. Things that Peter Lynch talks about. That's all about really portfolio management. And then you want to add, let's say, almost like to the side of that, you have this new world of investing, options. And options, a derivative product of the initial column, can be a lot more dangerous because a lot of times it's a timing factor, right? Because at the very least, let's say you buy common stock and you're right. good company, undervalued. Market has no idea what it's doing. It doesn't make any sense. You're right. You're so right. But the timing is off. Well, if you do an option strategy and you did all in on that option strategy, well, I hope that you're right on the timing too. You have to be directionally right, and you have to be correct on the timing of it. All right. So it's more complicated. It adds more complexity, and there you can be successful. But I think that thinking of options algorithmically is problematic. It's nuanced. It's selective. It's just as hard, if not a little bit harder, than the first column, which is individual stocks, portfolio management, etc. Getting that down, and then kind of also coming into this realm, and then picking the right stock to do the options trade in, right? Because worrying about the timing and all that, and then managing that portfolio on top of that. So yeah, that's the quick spiel on that. Let me see. I'm getting added a lot in Discord for whatever reason. Trying to see if anyone's like asking me a question. Oh, I'm getting added. I started my rant on Tesla. I saw that. I'm still getting. Oh, and then I got a question from someone about VST. All right, but anyways, so tax season almost over. Yes, it is almost over, and then we will get the RU back. By the way, getting back from the gym now. If you stream for a while, I'll hop on in 15. I will stay up on stream. I'll stay up on stream just for you, Andrew. We'll go on for a little bit longer once you're on. Okay, so next time I got to do it live. You want to hop on? Let's go. All right, so let me go ahead and invite, and I'll share my link to you. Bum, 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 da, bum. What sector? Oh, great question, Ja. What sector of the market looks most attractive right now? Wow. Okay, there's a few. I think REITs still look attractive. Okay, but I'll give you a few because REITs might not be everyone's alley. So I think REITs look attractive. I think that infrastructure still looks attractive. I think that some consumer staples look attractive. I think that I'm so bricked up on Chipotle right now. Yeah, within consumer staples, not all of them. Some businesses in the food space look pretty attractive. There's a few. There's actually a lot of opportunities. I think in total, for example, for this month's in like what we call the current main ideas, there is, I think, here's bacon. There is, I think over 20. There's too many here in this list to count, but I think there's over 20.
Over 9,000.
Current main ideas, as in things that look quite interesting. Fabio has been loading up on CELH calls. Yes, totally. I do have some calls. I might, if we want to, we can talk about the contract. He's been spending about 20K a month on. I've been going all in with my monthly contributions. I got catering size bag of chips for free. That's kind of bearish. All right, so Bacon, what is your most interesting sector right now?
Sector?
Yeah, kind of on Jaws' question, because I like Jaws' question. What sector of the market is most attractive right now for you?
From a distance and just pure curiosity, even though I've concluded I'm not going in for it, gold miners.
Gold miners. We're going to have a conversation about that. There's some questions I want to address, but we are going to talk about gold miners. All right, so I hope
really?
you're ready to
Why?
yes, because you're going to be put on the spot here.
Why? I hate you.
General curiosity. It's just part of conversation. By the way, you have full advantage here. I know nothing about gold mining. So
yeah, you do. Don't sell yourself
short. Genuinely don't.
That is a lie and a half.
Genuinely do not. And so you will be talking to like a newborn baby in that. Okay, do not know. All right. Okay. So MNST. If you stay on for a little bit longer, you will have someone rant to you.
Very happy.
Yeah. He will be so happy. Just wait like 10 minutes, Ja. Ask this question again in 10 minutes. When the next person comes on, that next person, bring up this question again, and you just the floodgates will open. Okay, so Fabio, thoughts on why putting REITs in a Roth is a scam? No, it's not a scam. I think, like, for example, a Roth IRA and an IRA. Well, first of all, Roth IRAs are goated, but they stop you. The government, it's so good that the government stops you from putting money in it after you make a certain income. So super sad, but there's back doors into it. So do not worry. An IRA is also good somewhat. You can deduct from your income, which is nice, and then it phases out because the government doesn't like you. So the government just doesn't like you after you start making a certain amount of money. But it's still good. It's a nerf. Well, I mean, if you're gonna nerf someone,
it's OP. Yeah, it's OP.
It is OP. It is OP. And the reason why it's OP, and I max out my IRA every year. I put in the money almost towards the beginning. By Q1, it's done. By Q1, boom, it's done. The one I don't use much, but I still advocate for as a good product, is the 401k. I don't use that one much. I haven't utilized it in my career thus far to its maximum potential. As in, I haven't contributed nearly all of the potential that I could have. But I've just basically focused on doing my HSA, Roth IRA when I did, IRA now, and then eventually the plan is to roll over the IRA. And between the IRAs, I now have a good amount of capital because the amount of money you can really realistically have in an IRA at my age is can't be that much, even with good performance. So it's a good amount, but I wanted to get into hopefully one day a very sizable amount of money. And if I keep doing well, it could get there. For example, I mean, I'm not saying this is me. I'm not that guy. But the guy who's going to be in charge of Berkshire Hathaway after Warren Buffett, one of them, I think is Todd, turned $70K into $270 million in the IRA. Why is that insane? Is that none of that's taxable? None of it. And Peter Thiel, because I can't do this. Okay. So when you start a business, if you start a business and it's an S Corp, fun fact, S Corp, you cannot. So I'm not your tax professional. So ask your tax professional these questions. But getting that disclosure out there. When you start an S corporation, if you're a small business owner out there, you can't put the shares of the S corporation into your Roth IRA. You can't do that. However, if you do a C Corp, and there's reasons why you shouldn't do an S Corp, because it all depends on how much money you're making. Generally speaking, for most part, small business beneficial to do S Corp. All right, all the way through. If you do a C Corp, you can. If you do a REIT, you can. All these products, you can put them into a Roth IRA. And then however much you grow that business, man, if you grow that business, like Peter Thiel with PayPal, his PayPal shares, that's all on you, man. You have fun. Go for it. Sky's the limit. And, if you make billions of dollars because you had a great business adventure, you're real estate mogul, hey, congratulations. You're good. You're golden. So it's all about opportunity. I think the Roth IRA and the IRA, what's beautiful about them is the optionality that you have. 401ks can be quite restrictive. That's granted. And I won't get too far off the topic because I think that there are things that do help out in non-retirement accounts that you get access to. Having a large non-retirement account, there are things that become available. But the retirement account, especially holding a REIT in one, is very good. Most of my REIT assets, most of them, I think except for a couple shares of one of them, are in retirement accounts. And I think Andrew does the same thing. Or not Andrew, sorry, I spoke ahead of term. Someone else in the server recently told me that their entire our Roth IRA and IRA is only REITs. And then all the other stuff that doesn't really pay dividends is outside of that. So yeah, I view those accounts as good. And the HSA is additional, I think, beneficial. Like my HSA is just strictly in the well, actually, I'm in the I'm going to move it because I do want to move it to Fidelity. That's the one account that I want away, but it's like completely separate. So the HSA is also really good because you get that deduction. You can spend it early. You don't have to wait till retirement if it's on medical expenses, and it's actually quite broad. Everyone looking at an HSA. If you don't have an HSA, really think about getting an HSA. But yeah, the other part. Oh, Dex. So unfortunately, not the lion's share is not. The lion's share is not, and that's the sad thing. But it's it is what it is. We're obviously limited.
Yep.
So,
I mean, after all, why would you let an overpowered thing not be limited from a government perspective?
I am right now 100% S&P 500 in my HSA because that's the best product that I saw in there.
Yep.
So currently, with the bank that it's currently at, but I do want to switch out to something like Fidelity.
Oh, there's a question.
I think we're all okay. Oh yeah, this question here.
Yep.
Okay, can you put your IRA into? Yes, you can. Yes,
Or
you can.
wait, but would it be real estate into the IRA? Question mark.
Yeah,
Yeah,
reverse
like
that.
reversed. Yeah.
And I thought that's what he meant. But you
Yeah.
can, the government, again, talk to your tax professional before doing any of this. Do not just say, oh, I heard Fabio say this and then I'm doing it. And then you're like, what the hell? You can withdraw up to $10,000 from your Roth IRA, and I think IRA, if it's for the purpose of buying your residential property as a first-time home buyer, and it's a loan to yourself. So you're allowed to put the 10,000 back. So an example, you're someone who put in $50,000 in, and you have $50,000 in gains because you're great. You can take 10,000 of those gains and put it tax-free, no consequence, and put it towards your property that you're going to buy. And then, oh, I moved up my desk. And then you can, in the future, grab $10,000 and put it back in addition to your regular contributions. They allow you to do that. At any point in time, you can take out your principal amount from your Roth IRA. You can't do that with the IRA. What does that mean? So if you put in $50,000 and you made $50,000 in gains, you can take out $50,000 from your Roth IRA. You can. Nope, no punishment. You can do that because the Roth IRA is after tax income. The IRA rules change a bit. If you take money out of that one early, that was pre-tax income that went in there. So now the government's going to say, okay, give me my tax. And so there's a difference in consequence there. But as long as it's for the purpose of the home, then okay, you got something there. You got something there. But you can put real estate into your IRA. Although I kind of question, I might question like the benefits of that because with equities offer a much better rate of return more often than not, and real estate is already pretty tax efficient.
Yeah. Yeah.
Especially
There's
if you're in
also.
have you taken tax class yet, Megan?
I have not, but like the other consideration that I worry is, and I'm not a lawyer, but that legal aspect of it. Like, if we're talking property, real estate, as in you're not renting it out, then maybe that changes the legal concerns. But yeah, that's just piercing the veil is what I'm referencing, or
Yeah.
piercing the corporate veil. That's like I get it. In theory, maybe you can be better protected in some states than others, but like, the downside.
Yeah, and in your retirement accounts, you cannot use leverage.
Yeah.
You cannot use leverage. The government no does not allow that. So there's no margin borrowing and all that jazz.
Box spread.
Yeah, you can't do that. That would be cheating.
That'd be overpowered.
It'd be completely overpowered. But yeah, real estate is generally already pretty tax efficient, which is one of the reasons why it's so attractive. And the reason why I asked Bacon if he's taken tax accounting class yet,
Mhm.
is you'll notice that a lot of tax breaks, a lot of loopholes are given to real estate. A lot. There's so many. So you could, with individual real estate, I mean, there's ways to avoid paying taxes for forever, almost like forever, which is great. And in that way, it's kind of like an IRA, right? It's similar to an IRA. And then you can even structure the real estate depending on the entity. You can do it as a partnership. And if you structure as a partnership, the rent can be return of capital, and then you won't pay any rent on the rental income. You just deduct it from your value, and then every time you do investment into the property, you can increase your basis. And if you keep buying new property, you keep your basis going, and you can keep that going forever. And then when you pass away and it passes on to your next of kin, it goes at the step-up basis, and then they might not ever pay tax. So there's plenty of ways. By the way, for those of you who are like, oh, they're not paying their fair share. No, they're paying property tax. They're paying all these other forms of tax. So it's not like the government doesn't take their cut. The government takes their cut in one way or another every time. And, so it's not like it's free money per se. It's incentivizing. The government does this to incentivize certain behaviors. And then 1031 exchange, probably one of the best ones out there, of course, because you can defer forever. And so that's why, like, just owning real estate is in a way like an IRA. In a way. It's not exactly the same way. Did he just say free money? That's exactly what I'm freaking saying. That's exactly what I'm fucking saying.
No, jeez.
So
no.
if your spouse is a real estate
Fabio.
professional, oh my. Yes, in addition, there are certain expenses that you can then deduct if your spouse is a real estate professional. There's a lot of things. Like when you get into tax accounting, your eyes are just opened up to the world of just like how many deductions there are in real estate that don't exist in other things.
Yeah.
So I'm just going to put this comment up here because I'll take that compliment. I like that. So
yeah.
I'm trying to see that a lot of 1031 comments up here.
Yeah.
Oh,
there he is. There he is. Hopefully the person who that would be Ja or Ya.
Let me just switch my account real quick. Be right back. Sorry.
Wait, your account? Question mark?
The account that I'm signed in on.
Oh yeah, he wants to have control. He wants to be able to move things around.
Control freak.
Okay. Well, I mean, like naturally, I should be at like.
Look, he can let himself in now because he has power. Watch.
There we go. I am where I belong in order of importance.
I figured if I donated $7, I at least deserve to have some control, right?
Oh yeah, naturally. Still the channel, Andrew. Still the channel.
So.
No. For this question, I know it's because you probably couldn't see it on YouTube. No, he just said that. It probably was auto blocked on YouTube because YouTube doesn't allow profanity.
Mm-hmm.
What happened?
This comment that was recently posted by Gil, which I found funny.
Yeah.
So I can see all comments even if they're blocked. So it's like 2 comments above this comment.
Yeah.
So it's just blocked out. All right. We had a question from someone. I don't know if they're still here.
That would be Ja or yes or Ya.
Yeah. MST. Wait.
MNST.
Question mark?
Yes.
Okay. Look at how he smiles.
Yeah, you see,
he's
he perked up.
But the answer is yes. No. Okay. Let me give you a simple pitch.
All right. Fire away.
30x forward PE, 20 plus net income growth, sustainable for.
No. Look, the green screen.
Wait, what was that?
It's a brick.
Oh, you're all bricked up.
Oh.
I think it's even doing it to the face.
It's a brick wall.
I was trying to understand what you were saying. I thought there was like something in my hand.
No, look. Wow, my strap is a wall now.
What is your strap? Is it leather or what?
It's a rubber.
No,
rubber.
it's transparent.
Blue rubber.
He's actually a brick.
Yeah, no, it's actually you can see right through, and then my shirt, it's brick. I should wear the shirt that where it's just like the background is my shirt too. I'm just like a floating head.
Oh, Doms. Oh, Doms, you poor soul.
I mean, like, if it's a question of like product, that I'm not gonna like debate over taste, but
No, he said prospect. Like I think.
okay, yeah. The setup, I don't know.
All right,
Not
Dom.
my space.
Debate.
Fighting pandas.
Okay, so let me first talk about Monster just really quickly, and also I guess you could say Celsius and Monster are also kind of fundamentally different investments. So depending on what you like, but Monster, you're getting a company that's the clear number one player in a market that's going to continue to grow. Like I think it's pretty well documented. Gen Z likes caffeine.
Yes.
They don't smoke. They don't really drink alcohol as much as previous generations, but they like their caffeine. And the other thing about Monster that I like is they're still breaking into markets like China, and they're a sell to China story. They're not domiciled in China. There's no China like risk there. There's still a lot of market for them to grab internationally. And I think one of the things, I don't know if Dom Stocks is trolling me, but
the market cap.
Yeah. But you have this situation where they are continuing to grow, and then we can talk about how I feel like sometimes I hear stuff on earnings calls and I'm just like, I get bricked up and no one else cares. I'm like, what? Did you hear what I just heard? So what do they have? Let me see what their gross margins on the last quarter was. I want to say 53%.
Okay.
And an analyst asked literally, any reason you aren't going to get back to 60? Because 60 was like where they're at like peak COVID. And they go, yeah, the only reason we won't get back to 60 is because we don't give guidance.
Quick pause here to address this comment. No. Okay, so just start watching. No, the 1% I said, I did say 3% on retirement accounts for 3% gold, 1% not, and then the 1% is on everything else because I was talking about my cash. But they're in the live stream today. I did mention the retirement accounts, 3%. It's the part of the video or the live stream where I talked about the progression of Robinhood Gold and how they started. And then when I got to the retirement accounts, I mentioned that. But anyways, continue.
So, so let's say, management basically said, yeah, we're going to get back to 60% plus gross margins because one is they now own their own bottling facilities. So gross margins are going to inflect up. That was one of the really big things about the bank acquisition. So like just off let me just do like because the thing is your gross margins inflecting upward has no impact on SG&A. So like just for reference, like let's say, so they had last quarter, really awesome quarter, 21% year over year net income growth. Which for consumer staple like they are is insane. So they had, let me see what they had in terms of where I'm just trying to find the net income. Okay.
Found it.
Yeah, on the quarter, we're looking at 366 million, and that's off a 54% gross margin. Just take that 54% and you change it to 60%. Like this is the boring part, but let me just. Oops, no, that's right.
Are you sharing it? Question mark.
No. I'm just doing the math here real quick. I could share it, but it's like a simple calculator. Oh. But basically, it says you go from 938 million in gross profit to you get like an extra 100 million in net income off the same quarter, off no increased sales. So so think about this: they continue to grow the top line at like 15%, and you increase gross margins up to 60%. You're going to increase your bottom line at at more than 21%, but right around there.
There's too much math. Too much math.
Too much.
Why you overcomplicate this?
So my thing is that now I will address Celsius, and I will say this: Celsius is fundamentally a different play. It is a growth play. Monster has growth, but what you're betting on a Monster is they're going to continue to be number one in a company that is, or not a company, an industry that's continuing to grow, in my opinion. And for Dom, and Celsius, I think, is not competing with Monster. I think Celsius is good for Monster. I think I've said this many times before. Celsius is actually growing the energy drink market by actually expanding out to women.
I missed this.
For clarity,
Okay.
Rob, Monster is number one if you include all the products under Monster.
Yeah, because
So like if you look at one single brand, Red Bull is the most market share, but if you look at all the brands under Monster, Monster has far and away the most market share.
good old Rain.
But so for Celsius, yeah, that's, and I'm saying when you're in, just for clarity, when I'm saying you're investing in Monster and saying you're the clear number one person or number one company, I'm saying the Monster conglomerate because I'm talking about investing in the growing energy market. So let me just talk about Celsius real quick, and this one I can share my screen. And I know like people are going to get tired because I talk about this a lot. And there's a reason Celsius sold off. Off just a little bit of bad news, just a smidge. And it's really simple.
It's just
It's 100 times free cash flow.
Forward? Question mark.
Forward.
So we say that's not a good
Setup?
setup.
Question mark.
Let me just show you this. I think, and everyone knows this, if you're going to invest in a growth company, the number one company you invest in is this company right here. I don't think there's any question. I can get it at almost half the forward free cash flow. In this, and you're talking about a CPG versus a asset, like even for an asset light industry, they're asset light. Like that's, you know how they're like always like they talk about how out of cybersecurity they're the most asset light in terms of like installations.
Mm-hmm.
But Dom's stocks raises a question. Look at revenue and gross margins, mate.
Let's do that. Let's entertain this.
Sure,
and say, I want to see both of them compared. Dare I say it? Price of sales, multiple comparison.
Here's gross margins real quick.
Oh, well, I mean, different industry, so I'd expect a crowd to be super goosed.
He's saying, look at revenue, they'll figure out margins later. So he's saying, sorry, go ahead, Fabio. We'll go with what you're saying. Go ahead. So
let's pull Monster's gross margins. Oh, sorry, Monster's revenue, price of sales. Is that a metric it provides?
Yeah.
Yeah.
So let me
price of sales, and then Celsius price of sales. Map them out against each other. And then we're going to take into account sell side estimates on growth. We're going to do some Frankenstein peg ratio, but with sales. Then we're going to look at gross margins. I'll try to map that out on my end so we don't make this like ridiculous.
Are you going to put like multiple variables on the y-axis again?
No, we're kind of customized. No. We're customizing a viewpoint here to try to actually.
And I want to just give a little pushback on the gross margins figuring out.
Mm-hmm.
The other person that figured out gross margins is Pepsi, and that's why they just took some from Celsius. So.
What do you mean by that? Well, while you're nomming.
I gotta figure. I don't remember if it's right here. So, press releases. So in this, I think it's right here in this announcement, right?
Mm-hmm.
Here, I'll find it here for you in a second. Let me do this. While I'm doing this,
I'm going to map out I'll have the gross margins here on the side.
And I'm going to map out something on Google Maps.
So CELH, and then we want MNST together. And I'll share this when the time comes. And then we're going to look at gross margins. Earnings. No, we want profitability. Gross profit margin. Total return. Gross profit margin. There we go. All right. So
So I'm just showing you this because this guy right here is one of the biggest Celsius bulls. And he's even saying like Pepsi just took margin. And he's kind of trying to justify it, which I always find interesting. Like his justification is like maybe they think that they want to expand their product portfolio. So Pepsi's saying, you give us margins. So on the point of them figuring out margins, sure, I'm sure that they'll figure out how to expand margins, but I don't know. That's just thinking they'll figure it out is kind of weird when they've had kind of actually, and just really quickly, I want to show you the gross margins for Celsius actually went up a lot this year. I actually think it's going to come down. And so where does the actual gross margin land? Is the question.
Okay, so you're saying that because Pepsi's helping out their distribution, they're going to take their share, so to speak, from Celsius and reduce the gross margin Celsius had.
What happens if it returns back to their mean of like mid 40s?
Oh, it was not dead, but
no. But what were you going to say, Fabio? You were pulling up what? Because Monster is more efficient and Monster owns their own bottling facility and Celsius doesn't.
Yeah.
To answer Dom's question, why would Monster and Celsius basically sell the same product? But okay, so I'm sorry, I completely derailed things. Going back to Fabio's point, we're going to pull up price of sales. No. And just so you know, 10.7 versus 7.3 is a 50% plus chain difference, which is a lot.
And I'm looking, gross margins. I have it mapped out. It's Monster's consistently higher. Monster had it actually in the 60s back in 2017. It's compressed a bit, but now it looks like it's uptrending back. And so is Celsius's, but this is going to hit them.
Yeah. I mapped out my thing.
What's your thing?
The travel time from where I live to Puxatawny, Philadelphia, or Pennsylvania. Derp.
You were actually
Pat, feel free to laugh at me.
So just so Dom knows, Monster just acquired recently their own bottling facilities and guided for 60% margins on their most recent earnings call. So,
oh wow, okay, that's basically recovery to 2017. So the difference in gross margin is going to be easily over 10%.
Mm-hmm.
Well, here's something.
Did you map out the price of sales though? Do we have that?
Yeah, I had
it
here. Hold on.
I want to see that price. What? Sorry, Bacon.
Here's something against Celsius though. Becky is undefeated.
And is that against or for? That's for.
Becky is against Monster.
Can I ever say one thing though about Becky?
What?
Becky is not as loyal as Kyle. Kyle will just buy his Monster and chill.
All right, so Monster price of sales. What's the current?
Right here. Last Monster 7.73. Celsius is 10.29.
Okay, so
higher is better, Andrew.
We're
higher
looking at
for
it,
longer.
We're looking at it from this view because sales, I don't like sales.
I don't either.
No, who does?
All right, so then who's growing way faster? Sales. And I'm trying. This is probably where we get to the bullish thesis for Celsius. The growth on Celsius was like 100% last year, and then 50% forward.
I think estimates are 40 forward.
40 forward. Okay, so we'll take sell side there and just say, okay, that's. How about for do they have 2026?
30.
Okay, so deceleration.
Yeah.
And then Monsters. So
they have it going like
10 less,
low double digits.
10, 10.
Oh.
Okay. So then that's, I think, the point of the Celsius bull is they're saying the sales are growing way more. The multiple on a sales price to sales is 7.7 versus 10. So it's not that much more than Monster. And so they think, okay, they could catch up maybe over the years, and then they'll figure out the margins later. But you're saying as a Monster bull, the sales are still growing. 10% is still 10%, but the margins are expanding, and that's leading to an outsized return or growth in earnings per share. And that's where your share price appreciation is going to come from, because businesses can be or are valued at the end of the day by how much money they're able to bring on a forward basis.
And if you think that it's as easy for Celsius to break into foreign markets as it's been the US, like, we'll see. I think there's so much execution risk there.
I'll just buy Pepsi. No, I'm kidding.
But like, no, because the thing about Celsius is, and this is why I say they're fundamentally different investments. You're betting on management being able to break into Australia, being able to break into the UK, being able to break into all these other countries where they don't have their advertising base that they've had in the US or Canada. And, they don't have facilities that are close there, so they have to find a new supply chain network out there. Like, there's a whole list of things they have to figure out that Monster has figured out. One of the things about Monster, I'm pretty sure, so I'm going to do this. So if people don't know, Monster is one of the best stocks to have owned ever. Look at that band on the most they were ever valued on a forward PE basis is like 44. Going back to 2010. You don't want to, like, in this industry, you don't want to be fighting against valuation, because like even if Celsius, I mean, even if they grow at 40%, and now you're fighting valuation compression, because you can't be valued at 100 times free cash flow forever.
Not with that attitude.
Okay. It's seen as a healthy drink in the US. I find that to be that's terrifying to me if I'm a Celsius investor.
Yeah, the marketing, no chance that we can argue the marketing isn't at least creative. At the very least.
I would say, at least with all Monster products, I think anyone drinking it goes, yeah, I know it's bad for me, but like, it tastes good and I like it. But here's the thing. I think if Celsius executes, you can make a lot of money still, but they have to execute. That's why, and this is why it's like, for me, scary to hold something like this. You saw that announcement where like Pepsi's like, we're just going to take just a smidge of, and who knows how much margins, but they say, hey, just an announcement saying, hey, we're going to expand, but also we're taking margin share from you. Boom, you're down 9%. What happens if you have a suboptimal earnings report?
The setup is it's not ideal. It was once, I think.
Oh, well, and this 100%. Is the thing about Celsius. You look at past 5 years. Yeah, if I would have invested here, I wouldn't be talking to you guys.
Really? I'm hurt, Andrew.
Yeah.
Well, no, I'd still talk to you guys, but it'd be from my mega yacht.
No, you don't lie to us.
Yeah, Monster Java. I like the Irish cream. Just gonna say, I like the product for Monster. What?
And it looks like also this is shared among a lot of you in the club that are energy drinkers.
Well, so this
I don't hate it that much, but
this goes back to what I'm saying about Celsius versus Monster. They both, I don't even think in a lot of ways they are not going after the same customer base.
Yeah.
Celsius is marketed towards women, and like, for whatever reason, everyone that I know that likes Celsius doesn't like Monster and those things, and vice versa. There's very little crossover.
Yeah, we talked about this in that ICOM, right? They're expanding the market more so than anything. They're not really.
I actually think it's good for Monster.
Yeah.
But do you think that the customer base of Celsius are likely to drink said Monster?
Say again?
Do you think that the core Celsius customer base is likely to drink Monster.
I think that there can be some
Maybe
crossover.
Rain.
I think
Rain. I'll
Rain's-
go with Rain. Yeah.
So,
you know what?
okay.
I forget what
this
I
is
said.
another
Rain.
bearish thing for Celsius. I don't even think, and I've told people about this. The one that you need to watch out for Celsius is not Rainstorm. It's Alani Nu.
Oh, I've been hearing about this one.
Uh-oh.
Yeah.
This is the one that's going after women. This is the one you want to watch. And by the way, they are growing like a rocket.
Oh, look at that. It's a cute can.
Oh, look at that. My
You know who they
Becky
partnered with?
senses.
Who?
Who? Mr. Beast?
Kim Kardashian. Well, you know what? You know why I didn't find Alani Nu before you? I have the
Because
Kardashian
you have a filter. Yeah.
Yeah, anything associated. I can't
But,
I
like,
can't find out about it.
Show that on here.
It's not possible.
But the thing is it's like they are, and that's why I give me like I want Monster to buy these guys. But like I think they're. I don't like how much they've diversified. I mean, by the way, this flavor is really good. Like their flavors are better than Celsius in my opinion. But like people like Celsius, so I'm not even gonna get into that. I just don't. But Rainstorm kind of goes after that, but honestly. Rainstorm to me, like maybe I'll cut into a little bit. I think Rainstorm is just something like personally I like sometimes to drink just because it's like less badness that I'm putting in myself. I will say the monster alcohol is, I think, something that's interesting too.
Once we're done with this topic, I have financial fast food for us.
Uh-oh.
But I think, well, I'm just going to say this and then we can move on. Celsius can win. And it doesn't have to come at the cost of Monster and vice versa. I think they're very different companies. I am totally Monster. I'm going to sleep at well holding it every night.
Mm-hmm.
And I'm not going to wake up tomorrow and go, unless Coke comes out and says, we just sold all our Monster holdings. But even at that, Monster has other distribution partners. And they it would be kind of shocking too. Because it's like, okay, Coke, who are you going to, because they make money off the Monster distribution and it's massive. So like that would be kind of shocking. But outside of that, like it's one of the stock you can sleep really well at night. Celsius is one. It's like, and I have some stocks that are like this. You got to watch the press releases. What's going to happen? What's the setup? I think that there are some people like still could make a lot of money off of Celsius, but management has to they have to execute so well. So. Yeah. Also, fiscal philosophy, NOS is owned by Monster.
But what about Fizz? Ticker symbol Fizz.
NOS is owned by Monster as well. Jeez, man, you're just like the whole market. It's Monster. It's Monster, Red Bull, Celsius. But Monster's all the brands that you think are all independent. I tried Ghost. I tried Ghost the other day. I forgot to tell you, which is owned by Anheuser-Busch. And I tried the one that you guys told me to try, the Sour Patch Kids. It was good, not my thing, but like it was good. Like I could see the appeal. It's very like, oh wow, my childhood. But yeah,
I have one energy drink that is not owned by Monster though.
That's the one I had, the red Sour Patch. It was good. I'm still a coffee guy. I see the appeal. I do see the appeal. Like I see how that could. All right, what's your?
All right. Anyone know of a thing called Rippets?
Yeah, it's Fizz.
All right.
Oh,
No,
very
kidding.
sad. Yeah. Ticker symbol Fizz. No one.
Wait,
no
they have
one
an energy
cares
drink?
about Fizz. Yeah, Rippets.
Ribbits.
Yeah.
Is it good? That seems like a horrible name.
It is a horrible name, but
it's an
one
OG.
that's-
It's like
yeah.
I used to like them when I was like in high school. I haven't seen them since high school.
Who is in charge of the marketing department?
It's beloved by the military.
How did that?
It's
How did that get through?
I think it was done in a time where like it was more like.
What do we name this product?
Because isn't their product wasn't like also geared at like dirt bike and stuff? I don't know. I was thinking kind of like.
Wait, what? How is? What's the context to this comment? Dex, what is the context to this comment?
Epstein Fabio.
What conversations are you having in the chat that you say this? I'm trying to read through. Oh, it's here.
Yeah. Yep. But yeah, Rippets.
Dude,
It's
like
funny.
they still have some they still have F-bomb, atomic bomb.
Yeah.
That's crazy.
Yeah.
Oh,
because-
tribute.
Yeah,
Is-
of course.
yeah.
Yeah, like that. This is why I know about Rippets, and this is why I know about Fizz.
Look at it's bacon
like
right there.
Simple Fizz.
It's you right there, bacon.
No. These days I'm fat.
So, but anyways, to wrap it up, and I said this about 10 different ways, but
Yeah.
Celsius and Monster are fundamentally different investment types. And so it depends on what you're looking for out of your investment. I don't like the setup for Celsius.
No.
I'm with you there. There has to be a lot, but it almost sounds like are you long Monster?
Didn't I say that? Well, people know it, but yeah, I am long Monster.
Are you
Are you long Monster?
conflict of
long
interest?
Imagine he goes like, no, I'm not long either. I just think both are like.
No, I'm not long. I just have very strong feelings on one and not very strong feelings on the other.
Oh man. All right.
Yep.
So before we're gonna talk about Apple after this, but
No.
interim conversation on financial junk food because it was requested. And you know what? Who am I to deny the people the junk food?
You are Fabio.
What does that mean?
That means something.
Trying to find.
Did you edit the title so it says Celsius versus Monster?
Yeah. I
Yes.
was like, all right, we're getting into this. We're getting into this. All right, so I have to go to 213.35.
Boom.
Hold on, let me first set us up. I'm told something interesting happens in this funny person's YouTube.
Uh-oh.
All right, financial junk food interim. Then we'll be talking about Apple.
This is the
I didn't
junk
see
food.
this.
This is like
All right, I did not see this yet. Okay,
All right.
let me get prepared. I have it on my other screen here, so I'm gonna watch alongside you guys. I think. Wait, let me make sure. Stop sharing. I need to make sure audio is shared. I'm gonna have to do this twice. Audio is shared. We are good to go. All right. Ready? All right.
Yeah.
So
Is there sound? I can't hear
Singing.
anything.
Told you this, but you lie and tell me into a growth investment. One and only, I have no idea who you are.
All right, wait. I already told you this, but you lied and turned me into a growth investor by the time we talked. So, I mean, you can make your own stories like you do. Oh, I remember one and only. All right,
Wait.
so
Background or
background. Yeah, background. I don't know. I have like this weird memory, so I memorize things and people that maybe I shouldn't care about. But one and only was one of the people that confronted Kemmer prior to myself confronting him. And from my understanding, one and only, if you somehow end up watching this, you said your story. You work at a restaurant, which, by the way, he very disrespectfully made fun of your profession the day after and didn't do it to your face. Okay, so it's actually here. When I say like this guy, if you feel bad for him, like a puppy, like a lost puppy that doesn't know what he's doing, he's kind of lost and scared. Don't feel bad for him. He's not actually a nice person. So just remember that. It's very important context.
he has those elements, but yeah, like he is at the end of the day a cult leader, and if you're not in his cult, he will kill you by banning you.
He is not a nice person. So one and only, I recall who you are. I remember hearing your conversation with Kemmer. You gave yourself some. The thing is, you opened up yourself a little bit. You shared personal details, and then he took those and then later discredited you and made fun of where you came from, which I think was terrible because especially he has nothing to really say in his own position. And by the way, congratulations if you stepped away from these strategies, you probably aren't going to die poor. So, and for my recollection, you're also quite young, so you have a long time ahead of you to grow your wealth. All right, so that's the context that's necessary. He had a conversation with Kemmer. He was a guy who invested in these products, and he was telling him, hey, you really are, you're not supposed to be living off the income from these funds. You're supposed to invest a good portion back into the fund so you don't experience NAV erosion. It's such a foreign concept to the individual we're listening to. who I think he is committing financial suicide on camera, which that's why I find such a fascination. And people within the club kind of also find that fascinating. Like when there's the downtime of investing, right? There's not always something to invest in. There's not always the next thing that's super exciting, shiny coin, whatever. Sometimes there are downtimes, and I think he actually fulfills. He completes me in that way. He completes me. He is what I call like watching The Office, but Wall Street. Like he's Michael Scott. Like he's genuinely is Michael Scott. Some of his moderators, oh my God, it's like watching Dwight in there. It's like, you throw in that HR guy. Like they have an economist guy that we all listen to him, and oh my God, what a clownish take. I have to react to that one day. Just like, but it's not to correct or anything. It's super entertaining to listen to. It's like, it's junk food. I get it. It's complete junk food. It's not something that I take away any value. It's literally like the same value I would take from watching The Office reruns, but Wall Street. And I say Wall Street tongue in cheek. But imagine if the setting of The Office was on Wall Street and you had Michael Scott running a trading floor.
So he's Michael Scott and Matt's Dwight.
Matt's definitely Dwight. Matt's 100% Dwight. Matt will like kiss his ass and ban anyone who like gets out of line. So Matt's definitely Dwight. I gotta say, maybe like the HR guy is the economist guy. Also has some clownish takes. They're just learning about options too. It's kind of hilarious.
Oh yeah.
Not hilarious. Like
Toby is any growth investor.
Hmm?
Any growth investor is Toby.
Any growth investor is Toby. Yeah. Yeah. That's true. And basically they also have very strange definitions for growth. Like there was this one guy, he has another YouTube channel. I was conversing with him. He's like, he said, "Oh, so you're a growth investor?" I'm like, what do you define as growth? And then his response was like, "Oh, so growth isn't your pronouns." And I was like, dude, what are you talking about? The guy doesn't even. But anyways, so community is it's like the most clownish community we could possibly find on the internet. There was one community that we found that we thought was clownish, but then we found out that they were making fun of this community. So then we were like, oh my gosh, there's a worse community. Then we found them. And then so they're like bottom barrel. There's no one like for now. Oh my God. Challenge to anyone out there. Find me one. Because then I'll just dump this and I'll be like, all right, this is boring. I'll go for this one. Because it's good to have the rerun of The Office. Okay, that's good, but this is like brand new content. You should have seen this. Like I couldn't watch the whole live stream today, but there was one part amazing. It was literally like a Michael Scott telling a story about a gangster. There was a shooting. It was fantastic storytelling. I was enamored. I was just like, oh.
There are three groups of people in that Discord. All right.
Okay. Go for it.
First two are probably like the vast majority, and that would be trolls such as us, because I have a feeling that they're going to get more people thanks to you referencing this. The other one would be people that are like trying to pump their own stuff as far as like their own YouTube channels or what have you. And then that last little sliver is the true believers of Kemmer.
Yeah, that's the funniest part. Is that there's actually very few of them that I think are legit fans. But the thing is, it's really funny because you look to your right, you look to your left, and then you're like, wait a minute, I think I know you from somewhere.
my favorite part was, and I got banned, and I'm not one of the people. I just was like, okay, I accept my banning. But it's funny because sometimes I watch the live streams and I like whatever. He's like, does anyone disagree with me? And it's just like,
nothing.
It's because if you disagree with it, it's like, okay, talk. You're going to get banned after this, but go ahead.
I'm really curious to see what he says to this comment here. He's probably going to say he's going to ban him. Like,
well, that's a YouTube comment, right?
Yeah, that's a YouTube comment, but he's going to ban him on YouTube. And so, but that's the context you needed. This guy talked to him on live in one of the live streams, and then he banned him from the Discord for disagreeing with him. So I'm curious what he's going to say here. But congratulations to you, man, that you got out of that. But because he was somewhat investing in these products, and he was kind of like slowly figuring out, because there's a lot of hope. I think I've spoken to 10 not 10 people. I think 8 people. 8 people individually. Shout out to you if you're watching this, because I know you guys, for the most part, I think each and every one of you said you subscribe to Capital Mindset now and you're watching the content. So if I was if you were one of the people I spoke to, hey, how you doing? And though there were a lot of people that I consider like a success that we kind of interacted, or I interacted with this individual, because he's not savable. He's done for. But there were people that they had the capacity of understanding. Okay, so let's listen.
Probably not a good idea to call a host "you lie." That's like going to somebody's house. I want you to think about this. I would just stop talking at this point, one and only, because as soon as you call me lie, I'm ready to move my hand to the right hand. I'm just gonna ban you. But this is a good moment here. I don't know you. We don't know each other. You may think you know me because you chat with me in some form of Discord, channel somewhere in the comment section. There's 1,000 comments. I must have answered over maybe 10,000 comments up to this point. I mean,
there was a guy. One of the club members sent me. There was a guy who watched our debate, I guess, between me and Kemmer, and then in my debate, if you listen to the debate between us, I tell him what's going to happen to the product. I tell him what the structural issues are, and then a guy he posts a question like, "Why does this happen?" Like weeks later after our debate, and then apparently maybe one of my viewers commented down below, "You literally had a debate with this person and another person. One of them was me, that told you this was going to happen, and you banned them." Michael Scott. Like, you can't make it up. That's why he's so entertaining, because
looks into the camera.
Need I need more explanation? So,
dude,
all right, let's yeah.
He's too much, man. Like,
I've never seen something like this. No one tops him. No one. I mean, there's adjacent people, by the way, that sort of still kind of also, but he's like, oh my God, just like above them. But they're not too far behind. Like, there's one guy that's like friends with him. His name's like, I think retire and dividends.
Dividends, yeah.
Yeah, he similar like clownish, but this guy's like,
bless you, Andrew.
Thank you.
Doing it for many years now, and so I don't know you. I don't remember you. I don't know who you are, and so I don't even know what the conversation is.
He apparently gets on and talks to him.
Would you like me to join Discord and talk? Sure. All right, come on in and talk.
Wait, but how did you ban him?
I'm not stopping you. I mean,
no,
it's a free channel. Come on in and talk and have discussion. Yeah.
That was the ending of the story.
Bro, you made 2 videos on me.
We may disagree on Celsius Monster, but we agree on this.
I did not know that he saw the videos. I thought that the guy just like stopped, like left, because that's what I'm saying. He told him, "Hey, I work in the restaurant industry. I do this, I do that." Dude, Kemmer is like freaking like I almost said the R word. But wow. Not very socially intelligent either, because if someone tells me a profession that they do, I don't go the next day, not to their face, and like ridicule it. Well, I think that's what he's referring to right there. He's like, "Bro, you made 2 videos on me. You want me to link them?" And I think he's offended, and he should be, because of what he said.
Well, the other thing too, like, let me just, you and I work in finance at like fairly what people would call like, I don't know, like high finance or higher up roles. Like, if you're working and like putting in honest work, like, you don't control where you're at in life. Like, I don't know why you'd make fun of like and it's also like against the ethos of his channel. Like, his whole channel is like, we're guys who like have these hard jobs and like, we're trying to make it, which actually I think it's the opposite. It sounds like the problem was like, this is the problem is what was the other guy? What was the guy's name that's mad at him?
One and only, or something
one
like
and
that.
only.
One and only is trying to make his life better, it sounds like.
Mhm.
And these people are not people that want to make your life better. They're like, I just want to like,
Brag about my fakeness.
no, I don't want to have to put in any work and improve my quality of life. That's
Income.
what they are. Right. And it sounds like one and only was like, no, like I'm working, I'm trying to get better. And so I'm questioning things. And I've questioned this, and now you're killing me for questioning this and ridiculing me. It's like, what the hell?
No,
Anyways.
because like the finance industry would never offer something that's too good to be true. That
Never. 50% returns every year is perfectly normal.
Yeah.
In dividends.
Sure, I don't know who they are. I don't remember the video. Yeah, go ahead.
He always does this, like plays like, well, he actually is, but he plays dumb. But like,
So
he actually,
are you coming to Discord to talk, or all right?
I mean, just a shout out to Ryan, who was in here earlier, like, because they went back and forth, and every time Ryan's mentioned, he's like, "Oh, I don't know who Ryan is."
Can you hear me?
Yep, I can hear you.
Let me mute this. Okay.
All right.
So you said you don't remember, but you literally, first off, last time we talked, I talked about mixing your portfolio so that you can actually withdraw from it.
Yeah.
Right. So that you can actually use the dividends. You then turned me into a growth investor by the time of it. Told your channel and your chat that I was attacking you, and that I said that their strategy is dumb, it's not going to work. And then by the end of that, I told you, hey, Kamir, you know what? I actually back tested this. Let me show you some things. And you said, why do people talk about back testing? It's so stupid. Don't talk about back testing. That's dumb. Back testing can't tell the future at all, right? So if you forgot, I mean, that's fine. But I mean, by the end of it, by the end of it, my entire portfolio had high yield dividends. I linked it to you, but you still ran with a narrative that I was a growth investor. And so what I realized is that you were interested much more in just pushing your own narrative and your own story. It had nothing to do with what I was saying. And you were like, I can't figure out what we disagree on. Well, the biggest disagreement that we have, Kamir, I said this before, is that you continue to push a narrative to people that buy a bunch of Tesla and then live off of it. The own fund manager, Jay, we already talked about this, but Jay literally says, do not do that. So all I did was come in with like, hey, you can still live off the dividends, but implement this. And by the end of it, I was an idiot who worked at a restaurant.
The comment, ban him.
Where's ban him?
Right there under the height YMAX guy, there's someone saying ban him. Like, they're all like that. That's why I'm telling everyone, do not feel bad for those people. Do not feel bad. They
Attempts have been made.
this fate. Yeah, the attempts have been made. Look at it this way. You, as the Capital Minds community, I have done on your behalf. I have attempted for you.
Yes.
I'll just sit back and watch. Don't worry about it. You guys can go try. I'm not saying, don't try, but if you want, go for it. Have fun. But
And to be clear, this is not the reference earlier. This isn't Celsius versus Monster, where I think long term both companies will do fine. You'll make money on both. This is like you are killing yourself financially versus like investing in S&P or something.
I also want to press, like, not only do we have a really at best questionable strategy here, but for context, that those that are like first time in this man Kemmers owes back taxes.
I forgot about that.
Has a massive amount of margin with his brokerage, and apparently has a personal loan for his questionable strategy.
Really?
Wait, he has a personal loan?
That's what I heard. I don't know the details, but that's what I've heard. So
wouldn't be surprised.
So if we can push this thing up, like he's already like, assuming that's true. Yeah, like this.
I can link you the video if you'd like. And I need to go back to
Dude,
my
that
restaurant
face,
job.
that face is
But
like, oh shit.
My point
fuck.
is,
Did you hear what he said?
I can pull the video.
Yeah.
I need to go to back to my restaurant job.
Hmm.
Yeah, the guy. You know what? He did offend you. He did belittle you, and he is so right to be angry.
is that the narrative that is being pushed is why you get so much flack. And I'm not even here to give you flack. I just don't understand why you needed to misrepresent me. By the time I ended it, I was like, hey, I feel for you, Kamir. You know, people come in, they get on your case, they're jerks. But then you said you say this, not me. But people are fake because they don't believe in high yield investing, and they need to believe wholeheartedly in it, or they're a bunch of haters, and so on and so forth. So if you don't remember, that's fine. But I mean,
No, I literally don't. You gotta imagine I interact with thousands of people. But let's just reset this.
Guys, just so you know, I interact with also a lot of people. I think I don't like doing that thing because I think it's bad when people do it with really large channel. I have a bigger channel than Kemmer. I have a lot more Discord members than Kemmer. I remember all the interactions. I can recall things, and I don't think it's an age thing. I know he's a lot older, but I would definitely recall a voice conversation I had with a member months ago. So if you brought it up to me,
we know the dynamics of Discord. The Discord, the way it works is, in reality, he probably has 30 to 40 people who are actively talking.
Yeah,
and so it's like, yeah. And if you did two whole videos on it.
He did 2 whole videos in addition to the debate.
Right.
Yeah. So I call lie on that immediately because
his face was like the "oh shit, I got caught" face.
Yeah,
the guy was talking.
There's so many things this man has got caught in, and you know what, Bacon? I'm gonna refer. I'm sorry to use you as my token military guy on stream, but I'm gonna have to use you because some people out there are not very, and they say you can't criticize because you're not military or whatever. So, what do you feel about that? Real quick.
Awful. Just
Awful
awful. Yeah. Like come on. Like you mean to tell me that like the officer corps or the enlisted corps or the non-commissioned officer corps haven't screwed up? Like that all of us are saints? Like no. Like not all of us are devils. Not all of us are like perfect saints. But like this is just fucked. Honestly, there's just no other word for it. It's fucked.
Thank you. All right.
Well, first, I apologize. If I come across the wrong way, and I deeply apologize if there's a misunderstanding, or if you survive this long and I haven't banned you, you probably make a case that I don't need to ban you, or because otherwise I wouldn't even have a conversation. I would just ban you. Make sense? It's not worth my time. But so that means I'm probably willing to hear you out or something. At least I don't know. If you made it this far, so my assumption is, well, you and I probably never talked. But if we did talk, and you survived, that means let me apologize again. But let's just reset this. So let's ask this question. So now I don't know when that happened, but let's now at this moment right now, you still have beef with me, or you still concerned, or?
I told you my position hasn't changed. I subscribe. I like your channel. I enjoy that you're covering your channel daily. I still like that you're focused on high yield investing because that's what I do. And my position is still the same. And I wholeheartedly believe it's true. It's just that because I pushed the Tesla narrative. No, there's nothing wrong with saying I like Tesla. I want to utilize it. There's nothing wrong with that. Yeah. The narrative that's being pushed is like, so for example, Eric just got on here and I listened to him, and if he was really excited, and he says he's going to use those dividends to pay for his pool. Now, I'm saying you can probably do that. Like if it's like a one-time thing and you want to take that investment and put it into a pool, by all means. But if you think that I'm going to buy Tesla and then I'm going to live off this, you're wrong.
Did I tell him to go buy Tesla?
Come here, you do it every
He
single
is
day.
so dense.
Right? Like I'm like that's what like so this
Like
is I'll say this.
today,
By the
this
way,
streaming here.
Look at them in the background.
When I was talking to Eric, you said I
Dividend
push him to
yield.
buy Tesla.
Why do you think he came in and thanked you? Thank you for all the advice. Thank you for all the thank you. Why? Because you're saying, go ahead. You know what? It's great. You praise them doing that. So yeah,
Is it Tesla or all high yield dividends?
High yield dividends, Tesla, whichever one you want to go.
Okay,
I mean,
I understand now. Okay, you thought I was just picking one fund. Okay, why didn't you say high yield dividends instead of Tesla?
Because it's been both. I mean, Tesla's been your main core fund in your portfolio.
It was the only core. I mean, when we first started off, there was no other one. There was Tesla, Clip, and OLK.
Right, and like I said, I don't. First off, I think this is one of the smartest things you can do if you buy this stuff on market.
Okay, so if you think that's a smart, what's the issue? What's the issue then?
Okay, the issue is, I just said it, is that you cannot live off of this without reinvesting it. That was my disagreement.
You cannot live off it without reinvesting. You cannot live off it. Then
correct.
At
that
some
makes
point,
sense.
they're gonna retire at some point.
Right, and that's what I'm trying to say is that when Jay himself said that if you're a retiree, you think you're going to buy this fund, put your 100K, your $1 million.
But let me ask you, why do you care? It's their portfolio. Why do you care?
I care because again, I care about what's actually right. I can't tell people what's a good idea.
So you're gonna white knight them. You feel the need to go and save them and rescue them because you think. Why? Because you think this portfolio is going to fail?
Well, I can't speak directly for yours. I mean, I think that.
Well, I'm going to live off my portfolio in 2 years.
Now, I know what you plan to do, Kamir. I've already told you. I know this. I know
everybody else is going to live off their portfolio.
But let me. Okay, I know what people plan to do, but I told this doesn't change. Like the way this works, it's like if you stick your hand in a blender, something happens, right? There is no argument. There is no.
Tell us see this. Let's just stop for a second. I'm going to ban you. Okay, just stop talking.
That's what I was telling you.
This is ridiculous. This is so
but
stupid.
Why
would you come and tell
so people
us
can't
that
disagree?
We're going to fail? Why are you going to come and tell us we're going to fail?
See, this is what I'm saying. My entire account is high yield. Stop trying to make
I don't know who you are, dude. I don't know who you are. I don't give a damn.
Don't make this a victim thing, bro. I have high yield in my portfolio.
I don't know who you are.
Nobody's
you can say whatever you want. We don't. No one here
No.
know who you are.
I'm trying to say.
Look at the mouse. Look at the mouse. He's so fucking stupid. He's getting so flustered. I don't know who you are. Like he goes, like he's scared to think. Like
Don't change the narrative.
I don't care. What a waste.
Don't change the narrative.
He's bad.
Don't change the narrative.
What a waste of time. Who the heck is this guy?
He got because see the mouse.
He's just like
Just
it's like the court of Kevin. You have been accused of free thoughts.
why are you telling us we're gonna fail? I'm gonna ban you. God damn, you can't make it up. Oh my gosh. You can't make this up.
The best thing in investing is to always have confirmation bias and an echo chamber.
Oh yeah. Oh yeah. Oh yeah. No, and for all my viewers and club members, like the club members I think know, because there's like a whole lore to this, because there's like what I call there's the Kemmers, right? And then there's like adjacent community, Kemmer rebels, I call them. I won't say the name of the actual movie, but it's all funny. It's like the whole thing is just like There's some good lore. It's like an iceberg, and you're just like so fascinated by its existence. You're like an outside observer. You're like, dear God, this is like. Anyways, yeah, that's in a. Oh my God,
Yeah.
that's a. Thank you for sharing that, Joseph Bruno. That was great. That was great. And imagine he's flustered for like the next 5 minutes.
Why do he come to our channel just to tell us that we're going to fail?
This guy's literally
this is what
in the
I'm
same
talking about.
fund
This is
as
what I'm
you.
talking about, man. It's just like
He's
it just
literally
never
investing
end. It never
alongside
ends.
you.
There's always someone.
He's not as a Soviet would say. He's not. Or no, sorry. Better example that people probably more familiar with because they learned it the French Revolution. He's not as a revolutionary enough.
Yes. Yeah.
Oh, yeah.
So you go to the guillotine.
I just love that like that the guy that he was talking to, the one and only or something like that, like he literally was like, yeah, I quoted the fund manager that this is what's going to happen. You need to do X or it will fail.
He said, "Why are you telling us we're gonna fail?"
It's just like because Kemmer also is a Tesla bull, no surprise with his Tesla hat. Go ahead.
I was just saying, I would love to do like with this kind of business meeting. Like you go in there and you're like, okay, so we're gonna have to discontinue this current product. It's not working out. Why are you telling us we're gonna fail? Well,
And he can't ban you in real life. Oh, by the way, further reason why you should not feel sorry for them. He's also been very dishonest about several things. For example, what he does as a profession. While he is a major in the Marine Corps, he was also fibbing about what his role was in said Marine Corps. He did not lie about his role. He lied about the tasks he would do. Oftentimes you'd hear him say he's doing very important, drills on invasions, on the United States collapsing.
really?
Yeah, and when I told Dan and Bacon this, that was his reaction to the left. Like, like what? for context, if everyone who watches, Dan and Bacon, and we have plenty of others in the community who are current and former military service members. And turns out, he's actually an ROTC instructor. Not to diss an ROTC instructor, but it's not what he said he was. He's an ROTC instructor at a high school. Far from what he claimed he was doing. So do not feel bad for this man.
And to your point, nothing wrong with that. But like,
nothing wrong with it.
If you're like, hey, I'm planning military invasions, and then it's like, oh, you're actually ROTC at a school. It's like, well, you might.
I don't know.
Yeah.
So I'm going to continue this because this is gold.
Like, how can you imagine come and tell the community that we're going to fail?
Oh, by the way, full disclosure. If you want to join the CM community and you want to tell me how I'm going to fail, please do, because you'll save me money.
Well, okay. I just want to say for clarity.
Yeah.
I like that Dom Stocks wants to argue with me over Celsius versus Monster.
Yeah.
Oh, that's great.
I wasn't for 1 second be like, ban him. Ban him. Get him off.
Mods, get him.
It was sensible stuff. We're talking top line. We're talking gross margins.
All right, new rule. The next person who doesn't say, Meta's still gonna keep going up forever, banned.
The next person doesn't fluff our stock picks, we're banning you.
Yeah. If you talk bad about stock, you may not even know that I own it. I'll just ban you. Dumb stocks, you're banned.
Be careful what you're long, also, because some of us short sometimes.
Meta's undervalued. All right, no, we can't. We can't ban Dom anymore.
I somewhat agree with him. He's saying right now, I might agree with him on that, but
yeah.
Okay. But he's immune from banning because now we're in good terms now. So fucking fun.
Like all of you gonna fail. Every one of you invest in this thing gonna fail.
Yeah. You're all gonna die poor. I'll say it.
Well, I mean,
man, in investment community is the most.
Some hope if you're just taking the dividends and reinvesting, you'll just underperform. But
they won't get the performance they need to get to that level. And because to reiterate, they're taking individual security risk,
Yep.
which is hard. So they pick the wrong stock. Oh, baby. They don't get the upside when they are right, or if they are right, because that's the better way to say it. If you are right, you don't get that upside. So you took on all that risk, and you're like, yeah, I took on all that risk, did all that work, bought that individual stock, made the choice. I'm not going to get the upside.
Yeah. Well, and it's funny because I did say this, which I think is funny. They actually do some relative valuation on their stocks. Like they only have a pool of like 20 stocks. But to be fair, YouTube Finance, it's like 10. So
I heard that in the live stream that you guys were in. Yeah.
Yeah. And they're just like, but they just look at them like, which one's got the best dividend yield? Well, Coney's gone up a lot. So it's going to pay out a big dividend. So actually, on a relative basis, I'm going to pick Coney. Kind of like they actually have some fundamental valuation metric, you know, it's payout. But
oh, by the way, if anyone's going to think about like trying to save them, don't bring up tax. Like anyone with a working brain would care about relative tax efficiency. You know, like normal people stuff. Yeah, they don't think about that. They're like, you bring up tax.
Let me go into the memes channel, and I'm going to pull up the screenshots that are freaking amazing.
Yeah. They're like, yeah, rich people don't care about taxes. Only like poor college students with college loans care about tax. Like what?
Dude, he's too funny. Dude.
That's like a paraphrase Kemmer's quote, by the way. Like, I wish I were joking.
Okay, so there's this one. I'm opening them both up. Here, while I'm hunting for this, I'll play this.
Whacked up community, man. Sometimes it just make me. It's so unmotivating sometimes. I don't know why.
Hey, come here.
Yeah.
Hey, this is Ghost.
Yeah,
My buddy texted me a minute ago when you were looking at my portfolio. They were asking for me. I was in the kitchen cooking, man. I'm sorry. I didn't mean to ignore you or anything. And I came back just now to the whole conversation. So I just let you guys speak. But yeah, no, I wasn't trying to ignore you earlier. I was just in the kitchen cooking. So yeah, sorry I missed that.
Yeah, no worry.
Shout out, Ghost.
See, that guy wants to be in our community. He wants to be in the community. That's why he hang out here. But he doesn't know how to be an adult in the room. He does not know how to have. Can you imagine invite him to our party, and all he does is complain about what I say or what we do, what the party like? Why are you in our party? So
I
what do you think
insulted
him.
him. And he was upset about that.
If you want to,
all right, here. This is some gold here. So this is from like the memes room. And this shit's like, you can't make it up. So here.
I love the memes room.
So there's a man. All you need to know is he was a name and he changed his name to Scotty. He's like, this is a spam. You have 10 minutes to answer why you like this link. You still haven't answered the simple question. Why do you like it? Again, you haven't answered. Why do you post link to something you can't answer? So why do you like it? Jimmy, I think he's likes having your attention and he's trying to piss you off. He, she, whatever. The point is the stock is high and the dividend stock or ETF, so it's no place here. What a waste of time. Over 6,000 stocks in the market. This person wants us to click on a link to the website as listed. As for his very simple question, why does he like it? He couldn't answer the question. Ban.
Do you know what the link was?
What was it? I didn't.
It was a link to the Robinhood Gold card. It wasn't even a stock. Because I talked to the individual that got banned. And he's like, no, I was just trying to get like, I was like, hey, this is like a cool card. And I was trying to get my referrals for it.
You're lying.
No, that's what it was.
I believe you, but like, there's no way.
Yeah.
There's no way.
Because you know who that was, it's a member of our community.
It is?
Yeah.
That's Lincoln. Oh my God.
He told me, he was like, yeah, it was just a Robinhood Gold card I was trying to link.
Poor Link.
This was another one.
Yeah.
I'm Scotty. I was the one who mentioned taxes, but everyone laughs at me. How do I get rich is avoid taxes. Invest in Tesla and sell when I'm old. I will sell enough to maintain the low tax bracket. So once I quit my high paying job, I will live off Tesla stock by selling a few shares a month until it's all gone. No one laugh at you. You are trying to promote a strategy
No one
without context to the group. At this party, we are talking about income. All of a sudden, and out of nowhere, you start talking about something that has nothing to do with our conversation. By the way, change your name to avoid a ban. It doesn't work. There are many YouTube and Discord channels that you can enjoy, but we are not enjoying you. Goodbye. Ban. Can't make this shit up. This one was one of my ones that made me laugh too.
This guy's got
Does
a
anyone?
PowerPoint. Just flipping through the slides. Go ahead.
Yeah, we're flipping through the slides. So, has anyone here taken out a personal loan? I used margin and it worked out great so far. I'm curious on a 24-month personal loan, and my divs would be able to cover the interest, and left with $10,000 worth of assets that net me a monthly income. I knew a lot of people who have done it. So the other guy claiming that he doesn't encourage or advise. Look, the claim, I do not encourage or advise. I knew a lot of people who have done it. I have not attempted this method because I like to keep my investment and my separate.
Okay, well, ignore the grammar.
Yeah. Then this other guy comes in. This guy, by the way, he's like, he's one of the people that has like actual problems, and he's gonna have a great end of life. Yes, it can work, but risky, but it can work. And he's taking about 15% interest. Yeah. 15%.
So are they taking a personal loan and then rolling that and then using like the funds to buy stocks that they're then taking margin on?
Bingo.
So so the effective interest on that loan is like, so if you're taking a 15% loan and then on another half of that, basically, you're taking you're taking out another loan for 12%.
Bingo.
Damn.
Yes. All right. Anyways, and then he comes back and says, a lot of people do it. Why do you need to talk to the bank? You don't have an online personal loan account. And that's just the end of that one. But there's more, not to bore everyone, because we got to talk about Apple.
Yep.
Bro, what the fuck? Just go to the casino at this point. Yes.
Some of us don't have enough money to just go to a casino and get that income and that cash flow.
But I actually get his point, because he's like, at least at a casino, there's a chance you win.
Yeah. At least there's a chance. At least there's a chance.
Okay.
If you
So
guys
on to
are, by
Apple.
the way, liking the content so far, if you're not subscribed, go ahead and subscribe. If you're on Twitter, because we have 166 people watching here across the platforms.
Hey.
Good turnout as always. And again, not subscribe. Follow me on Twitter. If you're not following me on Twitter, if you're on Twitch, I don't think we have any viewers on Twitch really, but if you are on Twitch, hey, do your thing there. And yeah, we'll continue on. All right, so I think we can pause the camera stuff for now. You guys get the idea why it's entertaining. It's like it's the quote from Robert Downey Jr. in the movie Tropical Thunder. Do you guys remember it?
I'm just a dude pretending
No.
to be another. Oh, sad.
But that
Oh,
one's
you
a
never
good
go.
quote.
You never go full.
You went full.
Yeah.
Never go full.
Yeah.
I think, what do you mean, you people?
Another good one.
That's probably the reference when he starts talking about like he takes like the moral high ground in this.
Yeah.
And he starts going like, you need to understand you're the elites, we're the working class. By the way, that's what they called me when I was in there.
Yes.
They called me an elite.
They called you an SJW too. It was hilarious.
Which is a funny, but yeah. So I probably will finish the rest of this video on my own out of sheer entertainment. Like legit. Why have the Office? No Peacock subscription. I pull up this guy and just let it roll. And I'm like, oh my God. Bro.
It's like if it was on Netflix, I would watch The Office. But since it's on Peacock, I'm watching the Kevers.
Yeah, actually. Yeah. I just pull this up and then boom, it's the same thing. Oftentimes they get boring and I skip through it. But like you get occasional bangers like I got rejected by the girl and then she ended up with a gangster and then the gangster got her pregnant and then the gangster threatened me with my life if I kept flirting with her, and then the guy died in a gunfight, and then I saw her again in college, and I was like, nah, it's a single moms, and like that story was today, and you run the risk of missing that. And that's just like,
Oh yeah.
that's a
A few
that's an
days
office
ago.
skit.
I don't
days
know.
ago, there
I
was-
like. Go ahead.
Yeah.
Because I just get bored. I'm like.
Oh, for
But
me,
then
it
again,
was, yeah.
I get bored with like the Jeremys too. Like I only like look at Jeremy for the update on like what is this idiot doing today.
Yeah, you got to alternate it. But
Like
yeah,
watching
yeah.
different channels.
Yeah.
Which
Like-
he just became more of a grifter today than ever. But
Is that possible?
Really?
well, you heard about him selling, right?
We'll talk
Yeah.
about that in a second. Big finish it, and then we'll move on to Jeremy.
Oh,
Then we'll go to Apple.
Yeah. So, with shit, with Cameron's, oh damn it, I'm drawing a blank. This is annoying. This is really annoying. Yeah, you know what? We can just put a pin in it, like
All
completely.
right, pin in it. All right.
Yeah.
Tell me the new grift.
Well, it's just kind of a continuation of the thought process, right? So what is Jeremy's selling point? How does he sell his grift?
I will make you outperform the market.
Yeah.
I have a lot of money,
Oh, yeah.
Oh,
Yeah.
Okay.
right? So do you know what he said he's doing now? Apparently he's selling stocks. He's going to cash. He's trying to raise cash or not put as much money into the stock market.
hmm
And his justification, he goes, if you have a smaller account, don't do this. You shouldn't do this. But because I have so much money, you have to invest differently when you have this much money.
That's not true.
I know.
Yeah, no, you know.
But like to me, it's becoming more grift because like basically the way that I interpret this is I don't know what I'm doing. My Tesla's down, my Palantir is down, because Palantir is kind of stalled out. Not that it's wrong, but like I think he's a very emotional, very short-term investor. He says he's long-term, he's not. Very short-term. So Palantir over the last month is down. Tesla's been down all year. Meta's my only stock that's up. SoFi's down. PayPal's been not good. Like it's up now, but I think he's still down on it overall. I think he's looking at it going like Nike's down, his like latest stock that he went into.
Yep.
And I think he's looking at his world of stocks, which is very niche,
hmm
and saying like, I don't know what I'm doing, but like I can't tell people. I don't know. Oh, my Chipotle short is down. My Toll Brothers short got eviscerated. That's why I think like his returns have not been good this year, even with Meta. Like,
remember that he commented in my channel, saying that, oh, blah blah blah, 1 year, blah blah. You know, my 1 year now is utterly destroying him.
well, because it was all indexed to. So like, his 1 year did very well because that 1 year was lapping Tattooed Chef going bankrupt, and like all these other things that like, okay, yeah, I mean, so he did fine on his high beta at that point. That's why on a 3 year time frame he's negative.
Yes.
He does one, yeah.
So like it's kind of like, okay, and we don't need to go too far into this, but to me that's an even bigger grift. You're like, I don't know what the hell I'm doing, so I'm going to cash, but like you stay invested because I have to sell you something. So you stay invested, but I'm not gonna be invested.
I remember what I was
Also-
going to say with Cameron's, but yeah, go
Also,
ahead.
to Bacon made this point, and it's a great point. He's also just a discount meet Kevin, so he's trying to meet Kevin move. So
It may
I
be
mean, Kevin
timing.
sold Tesla, right? All Tesla.
Oh
What
yeah,
again?
he shorted Tesla.
No, but did he sell
Fubo.
Tesla?
He also is big on Fubo. I forgot Fubo's gotten eviscerated.
Yeah.
Yeah, Fubo's
it's-
down 50% year to date.
It's funny because when Jeremy shows up with his burner and he gets called discount meat Kevin or poor man's meat
He gets
Kevin.
mad.
Yeah, like it may be just like the timing, but it seems consistent enough. Like if I were called the poor man's Fabio or the poor man's Andrew, I'd be like, yeah, not wrong.
He sold Meta. Oh, whoops. Dom's is saying he sold Meta by Nvidia and SoFi recently.
Well, one of those might have a chance of working out all right.
SoFi won't. Okay, but that's just that. To me, I think it's even bigger when you're like selling something that you don't even believe in. Like,
Yeah.
which he's saying, I don't believe in my own stock picking abilities, but you should. And that's my problem. So
Yeah, that's I think that interpretation's actually great because he's looking out at all his recent picks. He hung his coat on PayPal for whatever reason. And the only one that worked out was Meta recently. And he didn't allocate enough. And I know he's salty about that.
He did well on Elf, but that was one he allocated a very small amount to.
Very small amount to, and he sucks at portfolio management.
Yeah.
Mhm.
Yep.
Which I said you gotta, and that's how you know someone who's getting lucky versus it's purposeful.
Mhm.
Yeah.
He has no idea what he's investing in.
Yeah, no,
He's throwing darts.
There's a good book, especially for beginners. What's it? The
Art of
Portfolio
Execution.
Yeah, it's a good book because it talks about portfolio, and it's like very easy read, very simple. You can read it in a day, like a couple hours easily.
Mhm.
Talks about that.
What was your Kemmer reminder?
Oh yeah, the beautiful things that you'll hear would be horrible takes on the VIX, because everybody has horrible takes on the VIX. Technical analysis, awful macro takes, and not that long ago, also there was like hints of him potentially like blaming hedge funds or market manipulators.
Oh,
covered
there's
in other people in Cameron's.
yeah, he calls them dragons. The
Yeah.
dragons.
Oh, Oh, okay. That. Oh.
Yeah, he's actually a little also special with that too.
Okay. Alrighty.
So-
Yeah. Yeah. So that hopefully gets everyone up to speed for future chapters.
Yeah, and Dom's stocks, you know, you're also right from this standpoint because he lost more money in TTCF
Mhm.
than the entirety of the gains that he shows now.
Yep.
In one stock. He lost more in that one stock than add up all the gains right now than in the portfolio that he currently shows. All of it. He lost more in one stock. That's why when he starts bragging about his return, I can only sit there and just laugh. Just like you're just full of it. You're so full of it. You had potentially like $5 million and you now have $2 million. And the only reason why you have over $1 million is not because you're a skilled investor. It's because you tricked thousands of people to give you $1,000 here, $20,000 maybe there, $5,000 there, and you tricked a bunch of people across time, and that's all you did. You tricked them. So congratulations, you got your grift bucks.
Another way you can tell that they're grifters. Why do they charge everything up front?
Subscription revenues are hard.
Subscription revenues are hard. Yeah,
You have to continually give a good product and perform.
you know what? We should switch CM to that. $1,000 up front. You'll love it. Guarantee it.
This is where the Fabio quality just tanks.
Dom's
I just
stocks,
abandon it.
I can answer this question for you. It's because you move towards that because the YouTube algorithm is going to push you that way. You get pushed towards just making like the current hype stock, and then
Yeah.
you get pushed towards making 10-minute videos for mid-roll ads, and then you get pushed towards making, well, now I'm going to do Patreon. Well, now I got to make videos to push people to Patreon. If I talk about Tesla, I get a ton of views. So I'm going to talk about Tesla. Oh, if I talk about SoFi, I get more people than my Patreon.
That being said, though, that there is an oddity with the algorithm. Like, in fairness to the algo and creators, if you do something just niche enough, and I'm not saying like they're highest of the high tier, but like say for example with dividends, you pick like a random like dividend-ish company,
Mm-hmm.
like out of the blue, some of them like you'll have like a spike in viewer count. Like so there are little like pockets, and again, I'm not like putting the dividend community on some pedestal or anything like that, but
Mm-hmm.
there are like weird oddities.
Yeah.
For what that's worth.
Absolutely.
Yeah.
All right, we have the final topic of conversation of the night
Apple.
/ morning.
Apple.
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 So the question is, and actually, sorry, I need to ask Andrew one question because I told him I was going to ask him this question.
Oh, yeah.
It can be brief. You don't have to give me a long, well thought out answer. What price is your reconsideration price or consideration price, better to say, for Tesla?
Oh, for Tesla.
No,
Then we'll go to Apple.
I'm glad you didn't ask me that one.
I
You
know
know the answer. You know the answer.
20.
So here's my thing with Tesla.
hmm
Their energy business seems to be doing well. I don't follow them closely enough to know. The one thing I said, and we actually have the videos now to prove it, was that their margins are going to decline. I was like,
We need to post those videos. We can make them public.
yeah.
I don't see
We
why
also
not.
have I also have meta video, things like that downloaded.
Yeah.
But so just taking, I'm going to share my screen if that's sorry.
Go for it.
I'm not very good at being brief.
I believe in you, Andrew.
But if we look at the gross margins here, I mean, they're on a downtrend, right?
Yeah.
So one of two things is going to happen. They are going to normalize. What's Toyota TM?
It should be TM. No, Toyota's supposed to be TM. Oh, okay. It only has the Japanese, not the US
Yeah.
listed. Okay.
Not
I
all
can
that.
do-
7206.
It doesn't matter because I'm just pulling gross margins, so it should pull
Yeah.
either way. Okay. So if they stabilize margins here, like Toyota's best of the best, right? I think we all agree on that.
Yep.
If they can stabilize margins here, then we can. It's so hard right now. This company's in such a bad downtrend on everything. It feels like.
Yeah.
Like this company is. Like, from what I heard was that year-over-year deliveries will be negative.
Yeah.
For
like,
Q1.
I'm sorry. Assuming margins stabilize,
Well,
but
I was surprised they were growing the way they were with where interest rates were at. People were taking pretty high car loans.
yep.
My car loan recently was 6%.
How large is their exposure to China?
Decent.
Well, it was.
It's meaningful.
Yeah. I mean, well, are we talking revenue perspective, or are we talking like from the cost center?
So a couple things is I'm not a car guy.
Mm-hmm.
Investing, well, really are driving, but particularly investing. I don't like how it's not a good industry to be in. You're better off selling parts.
It's a tough industry. Yeah. Fairness to all the makers.
Where I would consider buying this because, and it's always hard because we're saying like it goes tomorrow or like we're imagining this price today at the current market price of the rest of the market. So we're just saying it stays at this price. Nothing else changes within the broader market, right? It would have to get really low. Like one is I'm not a car person, so I haven't spent the time kind of modeling out what this company is going to look like. I don't like their margin directions. I don't know where those normalize. I'm assuming net income's taking a hit. Maybe it's going up.
Yeah, that's a pleasant assumption.
Like the margins?
No, the net income margin is going up. That's a pleasant one.
Why doesn't it have? Oh, maybe let's go to financials here. You'll have my net income margins. But so, am I missing it? Net income margin. So, like, it's been saying flat at 15%. I don't know. I don't have like a solid number, being honest, but I'm going to throw a number out and say 80 a share.
Okay.
What was yours, Fabio?
That was high 70s.
Okay. Alrighty.
Oh.
Alrighty.
That's what I said earlier. So that's what I was about to say. Andrew just threw out very close. Where I'd say I'd look away from current opportunities and see Tesla. I'll be like, oh, okay.
Mm-hmm.
All right, moving on to Apple.
I mean, that's fair, Doms, I think. Apple.
What do we think about the current state of Apple? I think nothing's changed with the mode of this business. And if this business sells off, it is one I will buy. Oh, yeah.
How much more of a sell-off are you looking?
I need to see if I saw multiples get to like mid-teens, I'm in.
Okay. All right. That's fair. Forward multiples, I imagine.
Yeah. Forward multiple of 15, I'm in.
Okay.
Dude, at a forward multiple of 15 though, you're talking about still maybe if you have like another 30% drawdown.
Yep.
And then like obviously it's going to happen over time. So as the drawdown happens, earnings should go up, and then
When-
if that happens, I mean, what's happening right now is nothing that's impacting this. The one question, the one thing is, I don't know what's the status with the App Store. Like, so this is another one. I don't know a ton like about what's going on in terms of percentage of sales that's hardware, percentage of sales that's services or App Store sales.
I have zero doubt about all of it.
No.
Yeah.
My question becomes, where does is the growth just come from turning up the hardware? Because my one thing is, if I guess the one potential bear case is what happens if the DOJ comes out and like disallows them from using the App Store or having the App Store 30% fee or doing something like that.
Oh, I might be jumping the gun. I doubt any of that occurs. The
they already.
Oh my god.
Yeah.
Speeding tickets, expensive speeding tickets.
It's speeding tickets that they get,
Yeah.
but because the others are not, they cannot. It's not like laws.
Mm-hmm.
It's weird. I was talking to some Europeans. That authority is not making laws, but they can pass what Bacon just said: speeding tickets.
Yep.
So Apple, I have zero doubt in their continued ability to monetize services. I see it. Sorry. My God. Especially if we start to get into the new era of AI assistants or LLMs being these assistants that we might pay for, Apple, I think, has an advantage over. They can go at it by partnering. But at the end of the day, they follow this philosophical rule that I have that was instilled in me by someone of great importance. And it was like a general business rule. Whoever controls the customer has all the power.
Wow. You took that from Dune?
No. But funny enough, that's similar to whoever controls the spice has all the power.
Yeah, controls the world or galaxy.
Or controls the universe.
Yeah.
Similar, but no, business-minded form of Dune. And it's true here. Apple controls you, the customer. And I'm going to tell you, Andrew, I'm not a huge Apple fanboy. I will never switch from an iPhone. It is not going to happen. You cannot.
No.
They could charge double for the iPhone. I will still buy it over an Android.
I totally believe that.
Or Google.
No, I mean, I think.
Okay,
I think iPhone go ahead.
Well, no, just all encompassing. Think of the value. I have zero doubt in their ability to monetize the user base, because the value of the average user base of Apple is, I don't think they're tapping it yet. That's the thing. I don't think they're done tapping it. Google is willing to pay an increasing amount of money for access to those people, to advertise to those people.
Yes.
Because already when you're talking about Apple, you're talking about on average. It's not that Android users do not have these people. It's that on average, Apple has a lot of them that are on the upper income level.
Yeah.
And so, go for it.
I was going to say, Google lost their lawsuit, right? With
they can no longer pay it.
No, they can't have a monopoly on it. So like that's all they did was they lost and said, you have to give people other ways to download this. You know what happened 3 days after that?
What?
I go on my Google Chrome on my phone, and I open up Ticker because I'm just using it for the app.
Yep.
And a little drop down goes, boom, install Ticker. And you click yes, and it just takes you right to the Google App Store. They still can let you go through other things, but they're going to give you you have to go out of your way to find another app store to go through on an Android rather than the Google Play Store.
Naturally.
So I think Apple is better at this execution than Google will do that.
Oh, whether or not they can't allow another app store. Yeah. But I would never use another app store as a customer. I'm the customer. I would never do that.
Not even an Amazon store?
No.
Not even Epic Games Store, even if it's 30%
I will not. Yeah,
cheaper.
I won't go. I won't do it. The reason why is I trust Apple.
Right.
As a consumer, I trust them a lot. I trust them with having my financial data. I trust them with having all these photos, right? I trust them with all my photos. I trust them with being my phone. There's a lot of trust already I have with the brand. This random other app store, no thank you. I know that if I need a refund for something that I looked at it, the app did not really satisfy me to my degree, I can get a refund. Boom. And they'll honor it, and Apple will protect you. It's kind of sort of in that way like PayPal. Apple Pay, extremely convenient. They say, okay, you have to allow other wallets. Dude, why would I put another wallet on? Like, I am a Meta shareholder, right? Meta has like some wallet. Why the fuck am I going to use that? That makes no fucking sense. I literally just go, okay, boom, done. And Apple makes, I think, I forget what their commission is, but they make money every time someone uses Apple Pay. It's so convenient. If I have my Apple Watch on, boom, done. I have not. They can allow and be forced to allow another wallet. I'm not going to go to it. Same thing with an app store. I don't think the vast majority of users are not going to use it. No. I don't want to go out of my way to have this experience unless it's just that much more profound, but not really. No. Now you can make the argument that allowing another, like forcing Apple to allow certain features to be usable by Cash App is bullish for Cash App, it's bullish for this or that. Yeah, sure, it is. But in the case of like what Apple Wallet lets you do versus the others, I still don't really see a necessity, because Cash App doesn't do any of the things that Apple Wallet does. Like when I download a ticket from, let's say I want to go watch a movie, I pay for a ticket. The ticket can go, I can do it straight from the app, or if I wanted to, I can just put it into my Apple Wallet. Either way, it's super convenient. So I am not an Apple fanboy.
Mhm.
And I say that, I'm not an Apple fanboy, but I'm saying like I would not ever switch from iPhone. I like Windows operating system for computers. I also have a MacBook Pro. I think I like Windows a little bit better. But I don't see that Apple's product is that much worse. I can use both fairly easily. The phone, can't do it. I can't do it.
So I fully agree with you on all of that. And I think like if this company is at if it floats down to mid-teens valuation in a bubble, in a bubble, meaning we're talking nothing else happens in the stock market. Because my assumption is if Apple continues on this downtrend, there will be other weaknesses in the market. And so then you have to reassess, is Apple at 15 forward PE as attractive, just as an example, as a Meta at a 10 forward PE? Based on your experience, probably not.
Oh, no. Wait. Apple at a 15, you said?
I'm comparing it to where Meta was last year.
Which was a 10 forward.
Oh, but there's a greater certainty, I think. I would still pay for that because
yeah, that's fair. Yeah.
With Meta,
but
yeah, sorry.
I'm just, my point is, yeah, I guess so that's a bad example. My point is, we're saying Apple in a vacuum.
Mm-hmm.
But because my thing is like, if it floats down to mid-15s PE, I'm assuming there's other opportunities in the market. And then so like, if you said, I'm going to buy Apple at mid-15s PE.
I have a fun game.
Okay.
No. It's your question, but I want to throw it at you because I'm very curious to hear your answer. Okay. Apple 15, Alphabet 10. We have a crash in the market right now and sitting right in front of Apple.
Because
wait, I want to play this game.
Before we get there, I just want to answer why.
Yep.
Okay.
This crash in the market, if that crashes, there's a fundamental issue. In that situation, I have way more faith in Apple's management to figure things out. Well, I I agree with them there. They get that low. I'm buying TQ, but I have way more faith in Apple's management. Apple's management has proven to be some of the best. I still think Google has the best assets, some of the best assets, if not the best in the market. I just don't like their management.
Yep.
So, all right.
Hey, while Bacon's answers, Bacon, I want to hear your answer, but I'll let you go because the dogs are scratching at the door to go outside. So let's put them out. But go ahead.
Have a good one. Yeah, so I'm assuming that in this case, since two of the biggest companies in like the proper indexes just went like and crap the bed, index. Like I am like cramming it in there. Odds are, because no, no, is that a
Index?
cop out? Yeah, yeah, index like a proper like S&P 500 index.
Oh, but what if they well, no, yeah.
No,
Okay,
no,
so you
because
say
like odds are we're probably looking at something macro is my guess. Yeah.
yeah.
Yeah, like, and if that is the case, if it is the case where, like, on a go forward basis, one of the two or both of them, like, reestablish dominance, market clearly understands this, and so on and so forth. I'm golden either way. If it's such where, for whatever reason, like large cap tech as we currently know it, has been dethroned, and something else, for whatever reason, somehow takes their place, I would want to be, you know, indexed. Maybe that's a cop out, and feel
That
free
is
to
kind of a
crap.
cop out because
It
that's
is,
the
yeah,
answer every time.
that is true, but
Stock
like
market is down. What are you buying? Index.
that's
It's a
but
cop out.
but like in that case, though, like those are like the biggest of the big, though. Like I don't know. That's just me, though. Feel free to laugh at me, chat, but
So, what was the answer for you, Bacon? Just
index,
Index.
yeah, because odds are
Cop
it's
out.
probably
Cop out answer.
macro. But it's probably macro, though. Like,
okay.
and if we're talking like maximum like pain and uncertainty, then there maybe someone gets dethroned. Like maybe there is another muscle movement that you want to like tap into that you're not sure of right away. And yeah, yeah, the cop out lazy answer, sure, but
So, Saran, I'm saying, Saran asked buying back shares at close to 30x PE is
that
15%.
that is one of the things I was going to bring up. Was, wouldn't it be ironic if Apple hits 15 forward PE or like even 10 forward PE, and they're like, nope, no buyback somehow? Like,
Actually,
imagine.
Oh,
my argument's
kind of
actually
like coal companies.
Thank you, Fabio.
well. I was just gonna say when I say management's better, I mean like at actually pushing out products, at managing their base, managing the company. In a situation like that, that's what you care about.
Fabio, you make it sound like the coal companies were like at Apple valuations and we're buying back shares.
No, it just so happens coal companies during boom cycles they buy back tons of stock. During bust cycles or trough periods, they're like, "Oh, we have no
I
money
mean,
to buy back shares."
at least they cleaned up their debt. Like a lot of
Oh no, that's okay. That is what
Yeah.
you should do. But
Yeah.
then hoard cash. Just like hoard it. Just like pile it on. Don't pay it out as a dividend. Don't do that. Wait for that bad time, because then you know what happens? Yeah, your competitor over there. Oh yeah, now they're struggling. Do you want their assets? Maybe they want to sell off. Maybe they're scared. Buy them up. Maybe your shares are down a lot. Maybe you have a ton of cash. Maybe you're trading close to below or negative enterprise value. Oh, a lot of optionality there. No. Coal companies go, oh, the coal price is really high right now. We're making tons of money. Our PEs look pretty low. Let's just spend it all on buybacks, right? Yeah.
I mean, combination. Like let's
Combination.
let's not muddle the narrative here.
Yeah, some of them buying 15% of the entire company back in 1 year at pretty high prices versus where they were not too long ago. As if that's never going to happen again.
I haven't followed the coal companies that closely. I know you guys have looked into them a little more.
Yeah.
The argument I would say for Apple is they have much more sustainable
Oh well, obviously.
cash flows, and I think that like from a shareholder perspective, I think if they upped like doing dividends, that make more sense. But you also have to remember, like, what happens is you end up having your shareholder base be like, we like the buybacks. And your shareholder base wants that. You know what Apple should do? Apple should come out tomorrow and say, we're cutting the buyback and we're going to hoard cash. And then the stock drops, 30%. And then they come out 2 quarters and they're like, buybacks restarted. Here we go. Like,
you gotta what I would do, because you can't do it because you have to authorize it and you have to announce it, right?
That's what I'm saying. But you cancel it, and then like 2 quarters later, you reauthorize it.
You know who does work really well with this? Not to change it too much to a completely different stock, but I'm also doing that, and Sauron's going to love this because I'm going to pump his bag right now.
Mhm.
British,
Yeah, BTI.
American
How
tobacco.
how does that work though with
No, you
their
know,
London
Andrew,
restrictions?
please, with me. Tobacco.
Tobacco.
No, tobacco. Bacon, please. Join me.
Tobacco.
Tobacco.
Like
No,
I
no.
already have
You gotta
an
feel
idea
it. You gotta feel it in your
Oh God
in your
damn it!
tobacco.
Just pretend you just took a drag. Your lungs are full of tar.
Oh, I got you. I got you.
Tobacco.
Tobacco.
So, hear this out, right? Because there are limits to what they can do. But this puppy over here, this thing.
I just love that we've completely torpedoed Apple. But go ahead.
No. Because Andrew's right here.
Yeah.
Look at so this thing's yielding over 9% right now.
Mhm.
Arguably, what Andrew's saying, there's a lot of people invested in here for what? The dividend. All right.
Dividend.
And they're producing a lot of free cash flow. On a free cash flow basis, this thing is cheap. It is
Mhm.
cheap. We're talking 5 to 6 times free cash flow multiple. What would happen, Andrew? Because you can authorize the buyback. I guarantee you authorize a buyback. That kind of almost doesn't matter how much the buyback is. You cut that dividend to nothing. This shit's selling off.
Yeah. No,
yeah,
it doesn't matter
it's-
because that's
Yeah, look up below.
Oh my gosh. And can you imagine how effective that because that's all I care about. Remember Musa? What was the thesis of Musa? Those buybacks, oh my gosh, they were powerful back then.
Mhm.
Single digit multiple. Just saying, what are we going to do with all this cat? Buyback stock, single digit multiple. Allison, you love Allison.
Mhm.
What was happening there? Single digit multiple. What are we going to do with all this cat? Buyback
almost
stock.
at a single digit multiple. Like it's just barely double digits.
Well, look at here. You have like really low single digit multiple. Look at the sell side estimates.
But they couldn't do a buyback, right? Not
They-
that kind of level of buyback.
They can. Look at Imperial Brands.
Yeah.
Because
it just
what's
takes
the
longer.
restriction on an English or London company? I thought there's a restriction on that.
It's like I think 15%, and then they have to request permission, and then there's a tax as well.
After 15% of what?
Float.
Is that cumulative or just in a year?
I think it's by year.
Yeah.
Oh, this should be fine then.
Like-
I mean, if you buy
They're
back
not-
just below 15%,
They
like I'm
they
saying,
could do
yeah.
it though. They could get to that limit. That's what my point is. Imagine BTI throwing, and they would have enough cash to still pay down debt if they did this. We're
Mhm.
talking no dividend, buyback plus dividend, and the dividend cash, instead of going to dividend, it's going straight to buybacks. They do that for a couple years. I have no idea how the share price doesn't react. I have no idea, zero clue how it wouldn't react to the upside. You would literally have a situation, because if the business maintains itself, right?
Mhm.
And let's say they apply for permission because they're that crazy, and they're like, and they get approved for more buybacks. Actually, ignore that. Let's not get into that. They do what is necessary. They do something what Imperial Brands is doing. Imperial Brands, another cigarette company, is doing literally. I think the yield there is insane because you got the dividend about 8, almost 9%, and then the buyback yield's also insane. So right there, they're just like plowing capital to shareholders, and they still were paying down debt. BTI wants to pay down debt to I think 2.5 times EBITDA, 2 to 2.5 times EBITDA, and so they're still wanting to pay down debt. So that's why they're not doing so many buybacks right now. But if I had all the power at BTI, man, I'd be like, this dividend, nah. And again, think about the sell-off potentially that would cause. Oh my gosh,
What's their debt stack look like? Like, and are they trying to reduce that? Or are they okay at 2.5x?
That
EBITDA?
2 to 2.5x
Yeah,
EBITDA.
they wanna stop there.
Is
They're
what,
fine.
yeah,
Okay.
that's their target. Yeah.
Yeah.
At least that's what I heard.
No, I think that it's interesting. Like they could literally do 50. They could buy back 15% of the float with because on their valuation they're at a 15. They have a 15% free cash flow yield.
Yep.
Yep.
Yep. Yes. Yeah. Yeah. So right now, if I had all the power, that's what I would be doing. I'd say there no dividend. Screw this thing. We'll come back to this. Don't worry. We'll come back to this. There'll be a time where this will return, and we can grow it back with a vengeance if you stick through it. Buybacks galore all the way through. If a sell-off happens, even better. The buybacks will buy back more shares. Even better. All we have to worry about is maintaining or lowering our leverage if possible, right? If we want to meet that goal, and then focus on hopefully maintaining everything equal, operating margins equal, and we can keep the business relatively stable. Navigate that through as any management team should. But capital return policy,
It's
buybacks.
Yeah.
Would be phenomenal.
It's funny, like
I think
your entire not that it's wrong. It's funny, like I think it's a cool thing with capital markets. Your entire thesis is financial engineering, which is fine. I do that too, right? With Moose and everything. I think it's cool. But anyways. Like not
but,
really.
Like the good thing though is that this isn't like really like I fail to see how this would be unethical financial engineering. Like set aside that this is BTI, like pick any company out there and be like they feel, and many people would take a look at this company and be like it's underpriced or
so
super
this
cheap.
I'm not.
Yeah.
Sorry, I just want to clarify. When I say financial engineering, I'm not meaning that a negative term.
Yeah.
Okay, go ahead, Fabio.
Yeah, and well executed buybacks are so powerful because I don't have to explain it to you guys, but this is to the audience. Like conceptually, what we're looking at here is, I'm getting rid of cash. I'm losing cash, a current asset on our balance sheet, and I'm giving it up for what? What am I doing? I'm increasing all remaining shareholders' share of all future cash flows of the business. And then reflectively, in an efficient market, what you should more or less be realizing over a longer period of time is that value increase reflected in the share price. One way you see it visually happening in real time is the increase in earnings per share.
Yep.
So net income could actually, in some cases, be going down. Net income can be going down, but earnings per share could be going up if I'm buying back enough stock. I'm reducing share count, and I could still be increasing EPS over a period of time. So
we all know the poster child for buyback, the power of buybacks, right?
Yes, and that's why it's like people need to realize that it is a factor in returns. It is a factor. It very much is a factor if it's done well. No, it's not Apple. Auto.
I know. I'm joking.
O'Reilly.
Yes. Yeah. Those ones. Yeah. Those.
It 100% is a factor.
Yeah.
I think it's discounted too much sometimes.
Yeah, and especially in the case of BTI, though, like if the government's taxing it, that's not ideal for shareholders. But like, still, even with that drag.
Yeah. So, and I always maintain I like dividends more often than not because management teams I think don't do efficient buybacks.
Mm-hmm.
But when I find a management team that does efficient buybacks, those buybacks are infinitely more powerful than those dividends.
Yeah. But yes, I agree with like some of the replies like that. Look out below if the dividend were to be cut, because if this thing's like chilling in like by rule like dividend funds, they'll be like, oh, you cut it, like screw you, by rule, you're out.
This is what you hope for. If I was in control of BTI, this is what I would hope for. Oh my gosh. I'm hoping that you feel like I rug pulled you, you sell the stock, and then BTI money just rolls in and buys it all up.
I wouldn't be surprised if you go up to a 25% free cash flow yield at that point.
Oh my God, Andrew, could you imagine? Could you imagine the buybacks we could do? If only, Andrew, we were worth billions upon billions of dollars. We could buy up so many shares of BTI, go on the board and say, what are you doing? Stop it with this nonsense.
Oh, I thought you were gonna say we could run the company. I was like, oh, we have to live in England.
No. When you're at that level, man, you don't run the company. You just go to that board meeting. You tell the people who run the company what to do.
No,
you go fuck off.
If you're billions, like you would have a stooge, and that stooge
you
would
might not even show up. Yeah, you might even
outsource it.
Fun question. And you guys, I can't think of too many great examples off the top of my head. Worst buyback execution that you can think of?
Honestly,
IBM.
ooh,
And when they do that?
Whenever that woman took over in the beginning.
wow, way to make it about gender or sex.
I forgot her name.
So when do they do it?
Mama.
Like, when are we talking?
2000, like 2000, early 2010s.
Oh, right there on 2012.
Yeah, like earliest 2010s.
Oof.
Oh wow.
Yeah.
Oh, and they borrowed money to buy back stock.
You would pin it on that rather than certain mining companies, Fabio? Interesting.
Yeah, there's definitely no. I picked a popular name that everyone knows. Definitely mining companies take the cake though.
Oh, okay, alrighty.
But not the blue chip ones. You'll find non-blue chip, smaller mining companies.
Mhm.
They definitely take the cake, but no one knows about them.
Yeah.
So.
How about Nvidia right now doing buybacks?
Wait, can pull up Dex's comment though, because that's hilarious.
Yeah.
Cancel me, I dare you.
Oh man.
I have achieved a level few men wish to achieve. You hear that, Gil?
Are you crediting it to the box spread?
Maybe. Chase could come to me tomorrow and say we're not going to bank you anymore. And I'll be like, I don't need your capital.
You're like, I don't care.
I don't care. I don't
Now,
need your loans.
if your broker calls you and is like,
Then I'm fucked.
Yeah.
Then I'm fucked. I'm ostracized from the financial markets. It's over. It's Joe.
No. You'll still have access to another broker, I'm sure.
Yeah.
Yeah.
But what? Nvidia's doing buybacks.
Weren't they just selling shares not long ago? That's really weird.
Yeah, I was gonna say, like, if they are, wouldn't it just be enough to like counteract the relative dilution? With
All right.
this?
If that's the case, Jensen
Maybe.
Wong is smoking. He's visiting my store too much.
I just want to pull up and see what they said they did on the repurchase program, because that's insane if they did.
Yeah, I caught it. But
9 billion. All right. Well, what Nvidia is doing is they're grabbing money.
Yep.
They're going.
Are we? But like.
But what is that? How long is that authorization? Is that just a?
I don't know. Like, what I want to counter my own bias though. To be fair, like, and that would be, what if, from a forward basis, it's not necessarily them burning, monies as far as buyback.
Oh,
Or
you're gonna
yeah.
grow a ton.
Yeah.
That's
like,
the risk. Yeah, that is the
yeah,
risk.
like if they do, realistically grow a ton, like,
Dude.
is that necessarily them like setting things on fire?
Did you look at this transcript
Which one?
for Nvidia's last earnings call or listen to the call?
I
Yeah.
remember listening to part of it. I think.
I don't remember. It's really funny because all I do is I pull up and like Jensen Huang starts off, and I see right here, he just starts off this whole like presentation. God, I love Nvidia. He's the founder, right?
Yeah.
So,
You know, I should have bought Nvidia when I booted up a gaming PC a long time ago. I was like, Nvidia, and then that's like their old introduction when they to PC games.
that's crazy.
Yeah, they were like
again, knee jerk. My bias says I agree with Dom. I agree with like all you guys. That's just setting money on fire. But is there a case though where if the growth is projected, reasonable, and going to be achieved, is it then maybe not the case?
I'm guessing this happened a while ago, somewhere around these parts.
Yeah.
Oh, what kind of company is this?
It's a commodities company
It's a Canadian company, so odds are a miner.
or an oil.
Fabio, why you got to be like this? You make it sound like I didn't have specific rules with this, and that I made sure, and that I made sure that I wasn't over allocated in this. You make it sound like. Wait, is this a gold miner?
No, it's an energy co.
Oh, it's an energy co. All right. Yeah. You're. I really don't like you trying to like gaslight everybody on this.
It's almost like I said that miners do that, and Andrew came in here and just laid it out. It just happens to be a miner.
Hey,
Hmm.
I got one last topic for you here, Fabio. Before we end the
Yeah.
this is gonna be a spicy one.
Uh-oh.
Well, actually, let me see. I'm gonna put in the private chat. We can talk about this.
Is it going to be gold miners? Because Fabio said that he wanted to, for whatever reason, talk to me about it. Oh, that's better than more cool than gold miners, honestly. Fabio, are you cherry picking?
Fabio,
you make it sound like I'm invested in those two companies.
Which one?
Private chat?
Yeah, the private chat of StreamYard. Yeah.
Okay.
I'd say why not.
Before we do this,
yeah,
I am very, very neutral on this company.
And please, if you have kids in the room, tell them to go to the next room, please.
But I am very, very neutral on this company. But I saw this and I thought immediately, because I know you're bullish on this company, and wanted to see what you thought from this tweet.
Well, Visa doesn't even let payments go through their website anymore.
Really?
Yeah. You didn't know that?
Mm-mm.
Because of all the things that happen on their website?
No way.
Yeah.
Disney?
No. I was hinting the whole time at like a certain adult website. But anyways.
Oh.
It's an actual story that happened. Visa doesn't let the payments go through. All right. Anyways, run. It's 3 a.m. kids.
Yeah, I know. I saw that. That was nice. That made me laugh.
I don't know this guy at all.
Mm-hmm.
But there's how much short. It's shorted more Disney today.
Yep.
We have seen this story at least 5 times since we started shorting the stock in 2015.
Mm-hmm.
What typically occurs that the perma bulls always dream the dream and get encouraged by some near-term financial or KPI engineering at the hands of Iger. The stock re-rates, fast money comes in, becomes times to deliver. They always screw it up because their underlying business strategy is plagued with the innovator's dilemma or creative destruction or whatever you want to use to describe it. End of the day, their content delivery ecosystem is losing valuable moats and thus earnings, while their content itself is terminally broken due to bad hiring and personnel decisions, which look permanent at this point. Ask Peltz. Stock up 35% since earnings, while estimates up 9% due to cost cuts. Nobody has an answer for how Disney will successfully grow revenue over time ex parks.
And then technical analysis.
No, he's just showing the difference here between, I think, earnings and price. Like stock price. I'm assuming that's stock price and earnings.
Okay.
Do you have a response to this, Fabio?
He's using EPS or cash flow?
I think this has got to be EPS, right? I don't.
Yeah.
No. I mean, I'm too poor for a Bloomberg terminal. I'll
Yeah.
be honest.
It's got it. I'm 99% sure it's earning. It's
okay. Then
EPS.
I'm dismissing it. He should have used cash flow because of the write-offs. They're writing off a lot of content. Cash flow right now is going to. He's saying guided EPS, right? Or current EPS.
Yeah, he said estimates. So
yeah, it should have been probably better to use guided cash flow.
Yeah.
And that's even including the CapEx.
I don't know if he has anything else on this. I've never really.
I agree with the content.
Yeah, I think that's a fair and accurate statement. But like,
well, he doesn't like. Anyways, I can't find. But I thought that'd be an interesting thing for you to cover.
I just love the dispersion of like if you were in charge of Disney, and you wanted to like spin things off, what would you spin off? Like,
I don't think things need to be spun off. I think things just need to be course corrected, not spun off. Like ESPN's a great asset. Just don't fuck it up. Everything they have are great assets. The answer is always the same. Just stop fucking it up.
The problem is like they have a good show on ESPN with like First Take was a popular show. So what do? They just milk the shit out of that.
Yep.
Same thing with their movies. It's like, and they need to be better at like saying this is a good thing where you use it as a base and build other things off of it. Yes,
Yeah,
I agree. Sorry. This is why personally I'm just very neutral in the company.
Oh yeah. If I had ultimate power at Disney, there'd be so many layoffs in content creation. It's not even funny. It'd be a bloodbath. It'd be a bloodbath. If I had 100% control of this company for a year, and then I'd just give it off to someone more competent to run it. But I just focus on going in there and just cutting people in the content creation space. But then trying to find people. Obviously, by the way, I'd be using consultants. Third party.
No.
He
Okay.
hires McKesson to fire people.
So you would
That's
be
what you
you'd
do,
be
right?
setting capital on fire.
No, I wouldn't do that. But
No, but what you do is you hire some consultants like McKesson or Deloitte.
yeah,
They come in and they say, and you tell them to tell us we need to fire 30% of our staff.
Ideally,
Look, these third-party consultants are saying the problem is we have too much workforce and content.
Yep.
We need to fire them all.
Yep.
right sizing.
Yeah, they need so many cuts in there. Like Kathleen Kennedy, the fact that they had to they couldn't fire her and they had to delegate her to a back office. No, she gone. I don't care. We get sued. Gone.
Is
Send
she
a
Kennedy
message.
Kennedy, or is she
Kathleen
just...
Kennedy.
Yeah.
Oh, I don't know. I don't think so. I think she shares a namesake, but I don't think she's actually a Kennedy. Yeah, so much in there that's just like trash, utter trash. That's just needs to be taken out and cleaned up. So, content creation in the content creation space. I imagine that there's so many creative voices that have good ideas and they're not being elevated.
I also want and not as political a point, but I think some brands need to be rehabilitated. Like maybe this is the nostalgia in me, but anyone remember way back when Pixar movies were like a big
Yes.
deal and
Yeah.
like they were
Yeah.
meaningful? Yeah, like it seems like the Pixar brand got incredibly diluted with multiple releases in a given year.
Yeah.
What brand
That's just me
didn't?
though. What's that?
I said, what brand didn't? Look at Star Wars.
Very fair. Very fair. But like I'm just using like that one as a politically neutral one.
Mm-hmm.
Yeah. No, I mean the whole thing. Yeah. So like Star Wars is a wonderful asset that they're misusing. Pixar, you already have Disney animation. That could be your lower quality, more frequent pump of content. But Pixar, keep it Pixar.
That's just me. I don't know.
No, I agree with you though. They already have like Disney animation.
Yeah.
Which is technically a separate studio. It's a separate business inside of Disney. And then there's Pixar and Disney animation. They're totally separate.
Yeah.
Man, it's just like Disney. When I look at it, I see something that could be monstrous.
Yes.
And then I see what they've done. And it's just like, you see someone with so much potential in anything, right? They're very athletic or they have huge potential in sport. And then they're just lazy and they don't want to train. It's like that. They have so much potential built in there.
Mm-hmm.
But man, yeah. Yeah. And then Warner Brothers, on the other hand, they have great content. They're coming out with great content, like some of you guys are saying.
Yep.
Warner Brothers coming out with great content.
It's just they don't have theme parks and cruise lines the same way Disney does.
Which are great assets.
Yeah.
And people are realizing that. They're great assets. Warner Brothers Discovery has CNN though, so it's like gotta take away like 70 points from them for that. So it just is what it is. It's like I think that one. I'm not political here. That's like objectively like the most clownish news. Well, I don't know. There's probably a couple more out there, but they will replace Kathleen with someone just as bad. I hope not, because they fired a couple key people who seem to be high up and kind of toxic to the culture. The chief people officer, whatever, CFO, she's from the former regime. Yeah, there were some changes, and Shogun gives me a little bit of hope. That's a Disney show. Andrew's like, oh God, no.
What did you think? Did you watch it?
I haven't watched it yet, but I'm watching the reviews, how most people are receiving it, and it's being received well.
It is received very well, for sure. I think I'm just like,
people are wrong. Andrew's like,
no,
right.
I'm the minority. Everyone enjoys shows for their own reasons, and wasn't my cup of tea.
Yeah, and their debt pile. Does he say anything about their debt pile? No. This guy.
No. It was weird because wasn't there that like suspicion of like a whistleblower?
The story kept developing. There's nothing there. It seemed.
Yeah.
So. All right.
Yep.
All right, guys. Thank you guys so much for listening in today. We've had 4-hour stream, so you guys can't complain. You guys didn't get enough content this week. Not that anyone complains, but thank you guys so much for watching. I'll leave you guys out with the outro, and we'll be seeing you guys on the next live stream. Maybe I go live again tomorrow. I don't know, because I'm gonna be.
Oh, please don't. Please don't. Andrew and I have a live ourselves.
I'll go live before you or after you.
Okay.
Follow the YouTube channel, 2 Accountants, 1 Gap.
Yep. The number 2 and then the number 1.
1 Gap. Right.
Yep.
Okay. We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.